Lord, you here?
Yeah, I'm here.
Oh, okay, you thinking? All right, good job. Find some money. Let me go give you a like on YouTube, baby.
Hell yeah.
So, I'll let you focus. I'll ask you questions later. What'd you say, Richie? You bearish? What you bought? What you got?
I said PayPal's dumping.
Oh.
I mean, I remain bearish overall until proven otherwise.
All right, cool.
The volume looks like it's already diminishing for this push out.
Yeah, I'm gonna let this hourly candle close.
There's, on the hourly, there's two very value gaps at pre-market highs at the top, which is a 537.51. It could come back up to fill those, but I would say we're gonna test pre-market lows, 529, and if we break pre-market lows, then we're coming down to 520.
You guys think Nvidia dumped some more?
If the king keeps in tariffs, but I personally think I was gonna try to take the market today. Speaking of, I think on the compound, especially the bond market. Bond market is not like in this guy's agenda, in my opinion. I read a few articles on his back. But you got the Qs breaking out of the supply line on the daily?
Wait, you keep cutting, roboting.
Oh, do you have a supply line on the daily that is breaking out?
No.
On Qs? I took my high from March 26th. I drew a line up, and you had two various things.
Bro, you keep roboting. I have no idea what you're saying.
Alright, I'll quit.
Bro, that shit's so funny. He just is struggling so bad.
Yeah? Have fun, Cooper!
JH, appreciate the follow, the sub.
Hey man, you said yesterday Intel had a gap down to, I think you said 1989 or something. I think we filled that, right?
There's still a gap on the daily though.
What was that gap down to?
We came down to it, except we just gapped down from yesterday to today now, so we need to go up to 1980.
1980. Okay, that's what I thought. I thought that's what it was.
The VIX has a gap to fill to the upside. I think we might come down to test pre-market lows, 529. I don't know, need to see if we can break this opening range. Break below 531.57 on SPY. Like, there's more selling volume right now.
Morning, Omar.
Chicharrono.
What are you looking at, Sammy? What do you think? Right now. There's a fair value gap on the 15 minute that created in pre-market. That's down 530.18, so I would think that we're gonna come grab that liquidity, retest pre-market lows.
That's the way it's traveling.
That's the rest of the market selling off, and maybe XY is getting pops here and there. Selling volume's increasing too.
To me, it looks like big money and just trying to get out. Having a hard time getting out. That's what it just seems like to me, especially with like the Nvidia news and all that. And semiconductors.
Institutions are loaded up on puts on SPY. For the like mid-May, they were like 500 puts, I think. highs, so SPY to intraday lows. We had a 236 retracement and rejected on with high volume. So I think we're gonna come down to test pre-market lows 529.46. We break that with volume, we're going to 520. So ain't really nothing in between there.
You already take puts, Reggie, or are you already in?
Yeah, I'm almost 50% up.
I took it on that retest of the CISD on the break. On the 5 and Q.
That wasn't a retest.
Yeah.
Oh
Well,
wait, I'm looking on ES.
yeah. But this is risky because it could reverse here.
On the hourly, there's another fair value gap. The top of it is 528.78, and the bottom of the fair value gap is 527.48. There's not really a lot of buying volume coming in right now. Sellers are definitely in control today.
It's not increasing though. On the last 2 candles on the 5. I'll set my stop loss to be comfortable. You sound hungry.
Oh, you heard that?
Yeah.
Yeah, the energy sector here moving.
You would took that London that London.
Robot. Beep up. Boop, beep.
Alright, that was a nice entry here. Need this to get back to hop, because if hop gets rejected, we're gonna just go up to 382. Yeah. Oh, here we go. You're up 20% here.
Oh, you re-entered, bro?
Yeah, I re-entered. You didn't. You came down to the terminal bar, and I always tell you the terminal bar is the one to watch out for. And then you came down here, over exhaustion here, so you bounced right off of it with high volume.
Nice, nice. Yeah, I stopped out 3% gain on those puts. Let's see. That was a sweep, though. You playing Triple Q's 5-minute harmonica?
Yep. And you got rejected there exactly at that HSI retest line. That hop. It is good volume. Follow through on the off the terminal bar candle here. High volume, and then you have about a minute. We need this to get high up there and hopefully close above a hop, and you could reverse everything. Early morning pre-market, you generated that pattern that's exactly at the terminal bar. You flipped and you pushed up here on Qs. You had a flush there again, almost to the bottom of the terminal bar again, with pretty decent volume there, and then now you're getting follow through. So if we could just break above hop, you're gonna recover back maybe to test intraday highs, and then maybe the whole bullish ABCD pattern up here, and then maybe again 453 here, which is what I had. Thought I was gonna hold support above hop on the 5-minute. It did go up to T1, but no follow through. You just generated a what, shark, bat, a crab on the 5 on the queue right now. XA is at 450.
Like a pretty good rejection off the 382. Selling volume's increasing again. Oh, that 5-minute candle is disgusting. Bearish and dolphin.
Lord, but
It's decreasing volume on the 5-minute. It didn't
you had those
engulf
two
either.
impulse waves.
Huh?
You had two impulsive waves, one at the 618 and one at the 0.5 currently.
The bearish volume on this last candle was more than the bullish on the previous candle.
What are you talking about? There's less volume.
On mine shows
On what time frame?
on the 5. My volume shows bearish and bullish volume. So it indicates like how much there is of each.
Oh, I see. What indicator is that?
It's called the BS.
No, that's bullshit, bro.
That's literally all it's called, BS.
Is it by Ralph?
Buy sell volume bars. Yes.
Buy,
both. Yeah.
buy, sell, volume.
Buy sell volume bars by Rocky.
You said Ralki?
Yes.
called BS?
RAUKI. Yep.
Yeah.
It indicates how much buying volume and selling volume are in one candle.
Oh, that's actually a pretty neat one. I like it.
I just wanted to hit 529.48. Test this level.
You gotta play with the settings at all?
No, I haven't messed with any of it. I don't know. I don't think. No, I haven't touched it. Some volume indicators give you like a moving average too, but this one doesn't have one, I don't think.
On Q's here, the compared to SPY was a little different. On Q's, this red candle that we had 10 minutes ago, less volume, and you had a hammer candle here that pretty much met. So this is where VPA is kind of this is a widespread candle, the red candle here, and this hammer candle on the Qs that we just got was a much wider or smaller spread than the previous, off of pretty much the same volume. This candle did not support this move down, in my opinion, on the Qs here, because it's almost the same spread as even the previous 5-minute candle, which was high volume. And look what's happening now. It's an anomaly, exactly, Norsky. We do need to break above this here. That's the 50% retracement here, or the HSI dot retest line where we got rejected twice. On SPY here too, the if you're just tracking regular volume, like the regular indicator volume, just whenever it's bearish, whenever it's bullish, based on what's happened in the previous close, this is also an anomaly. Wider spread off of less volume. So different indicators are going to tell you different things because they follow different things. But regular volume, this thing told you that it was decreasing volume. Anomaly here too. This candle here in the 5 is kind of a big deal here. You want to match the previous candle and, more importantly, pass the anomaly's volume to suggest that it was an anomaly and you're going to continue pushing up. Nice little push here on the Qs. Currently at that HSI dart. There it is. That's a break. Let's see if it holds. We're looking for T1 here, or XA, sorry, a 450.04. There it is. I'm about to take my first profit here, guys. Going to get failed. They're up 26%. I haven't taken anything. Or nice, 30% profit here on Qs. Now we're going. This is gonna, I told you guys, if you break this, we're gonna reverse everything. See if we can go to 451 now. And more importantly, that 453 is which I had earlier, those 453 calls, you'd have T1 453 there. That'd be nice if we get up there. Okay, get filled at 3.2. Yeah. Now, getting rejected off XA here, which brought us back below the 618. We kind of just came up here to fill that FEG there.
Lord, can you hear me?
Yeah.
Like, wasn't it also bullish because the two impulse waves was not consistent? One was 618 and one was 0.5.
You can't really say it because to be bullish because they're not
Okay,
inconsistent. You have to say it differently or rephrase it.
Well,
Because it's not the case. Just because it's inconsistency doesn't mean it's bullish or bearish. That it's going to be bullish or bearish.
oh no, you still got to wait for your confirmation for the reversal. Yeah.
Yeah,
But
but
I'm just saying for the impulse wave perspective or analysis on that.
well, still, you can't say it's bullish just because it's inconsistency.
Well, be cautious. All right.
Yeah, just be cautious of the chop there.
Yeah. Yeah.
It's there could be pressure there, that buying pressure coming in. It could be exhaustion. It could be several things, and it could fail too. It could just continue because it's so choppy and because it's not there's inconsistency there. That means there could be continuation because of that. Nobody's showing their hands. Now I'll say this about this candle here. This 5-minute push up here off low volume. This is also an anomaly. This was if you this candle here, anomaly, less volume than even this red candle. But VPA says, Anna Cooling says, if you have follow through off of anomaly, it just means continuation and strength. And this 5-minute candle that you're currently getting on the Qs actually is passing the previous candle with high volume. You still got a minute, so that candle is supported. Yeah, dude, gold is fucking crazy, man. I saw that pre-market. That shit is crazy. $3,300 an ounce. Alright, getting back above XA, that's nice. So, in light of what's happening, because we have a little bit of resistance here at XA, we did close above the 6182 from swing high to swing low. This is obviously at the point trying to flip this momentum back to being bullish and making higher highs or lows, but is rejecting the 618. Now we're closing below. See if this is a retest. HSI dot retest line there. If it holds, you want to push back up. If not, you're gonna maybe start your first. That was your first impulse wave corrective move, and now you're gonna start a lower low.
Hello, Adi.
What's up, Sam?
You know you are so mean.
Why?
Just like that.
What?
Just like that.
What like that?
Mean.
Chill.
11:30 pop-up now.
Yeah. Do you know where he's talking or what conference? What?
Know.
If he's
Timing is confusing for a lot of people, different time, but 11:30 I see what
He's going to try to calm down the bond market.
Japan in the house, so we'll see. Taiwan or Japan? Yeah, Japan
Yeah,
is in the
he
house.
said they says it's a delivers economic outlook in Chicago. So you should be talking about the economy. So I guess we should be paying attention to that. Delivers economic outlook at Chicago. Alright guys, I think I'm gonna take the rest here. I don't like that we got rejected off of XA. Oh. I guess fuck. Oh. HSI retest line's working, so come on man, get above XA. That's a good candle here. Come on. Keep me in the game. UVXY is coming to test intraday lows. Well, I'm still in the game, but this XA is being a little bit hard to break above. I think the Bears know what happens if they lose here. They lose control of this area. Crypto running. All right, let's go.
I don't know how. I don't understand how Spy does this all the time, man. Like on the lower time frames, there's hardly any volume when it moves up. Like the candles are not congruent with the amount of volume that the price moves. But like bearish volume, it takes so much volume to get it to move, even a little bit.
Remember I mentioned earlier when you was in the puts, watch out, because it was like Lord mentions it all the time too. You count two candles, the two candles of the volume, the most recent candles, you consider that volume, because they can change. They could change the price action. The last two volume bars always you count. And yeah. Right, Lord?
I just look at what's going on, and if I see an anomaly, if I see decreased volume, I just look at all that stuff.
No, but you always count two candles, the most recent two candles, and look at the volume.
Well, I look at it if there's, I mean, if there's, like I said, if there's an anomaly, or if there's a reversal candle.
On the push-up, it's garbage. And we're fighting to break above the 618 from intraday highs to lows. There it is.
40% profit
Volume
here
is
on
juicy.
oh no, never mind. What the fuck?
Hey, don't use those words. His baby there, okay?
What did this go high to? 3.28. Really? 2 pennies,
Lakshmi's
Sammy.
there?
No, she's not here.
All right. Otherwise, I have to raise my voice.
We have officially broken momentum bullish here.
Look at the decreasing volume on the 5 minute though. Like, it's going down.
but there's also no sellers stepping up. That's the problem. I think you're not seeing either. Like the only, even on the cues here, the only red candle you got in this 1, 2, 3, 4, 5, 6 in this half hour was just one 5-minute candle that came with selling pressure. And now look what this current candle is doing. It's going past that red volume that we just got 5 minutes ago on higher volume. The sellers are not stepping up. That's, you can move up of decrease in volume if the sellers are not stepping up. Same thing with the, you know, with the bullish case scenario. Alright, I'm taking some profit right here, guys. We just got a big pop. Hell yeah. Market order 3.55. There we go. Just 55% profit here. Take it. I can remove this line because now we can see if we're gonna, since we broke bullish momentum back up here, now we want to see if this is gonna start creating, where's my shit, impulse wave, corrective move, make higher highs, higher lows, or you fail. That's a big, see this 5-minute candle here on the Qs is huge. And it still has 30 seconds here. Give me T1. If you're gonna give me T1. You owe me for earlier.
I literally just said the same thing to myself. I was like, you owe me for yesterday.
See if we come and retest XA again. Reset a little bit of the oscillators and then go. But I'm already out 75% of my position here. Fuck that. Good candle here on the Qs. I'm assuming Microsoft had a pop. Nope, what had a pop? Amazon, Apple had a pop, Google. Damn, dude, the energy sector here. Where was this freaking solid entry? It caught the bottom basically. On the second entry. Let's see how close I got. My average is at 229 and the low it went to, what time did I buy them at? 10:02. To bottom here. And the lowest point it came down to was 206. So I missed it. Not perfect, but damn close. HYMC hold candle. People still track HYMC? Hey, what if, since China's stopping, what is it, the rare earth minerals? To send over to the US, what if HYMC is that company? Psych?
I don't think it's the same rare earth minerals.
The thing is that we don't have the refinery infrastructure to do that. That's why we send our shit to China, because they do.
Yeah. And we don't have minerals that they have. But the processing part is a big one. From what I read. They used to buy all our treasury bonds, biggest holder. They used to take out trash and recycle it and turn it into products. Not anymore.
Oh, great. I think you're going to slow down here at XA for Pal. He talks in less than an hour. Oh.
I was talking at 1:30 Eastern.
1:30 Eastern? I thought it was 11:30. Oh shit. Okay, well, it's kind of good news then. No, you're right. Sammy, you told me 11:30.
But different time people saying this 11:30 I was thinking.
I already full ported, bro.
I thought it was 11:30 too.
It says 1:30.
Right now, I don't think so right now. Does any see anything come out? I don't see anything.
No, it's at 1:30.
1:30 now?
That's what the economic calendar has said.
No. Because of different timing I saw on a Twitter, and a lot of was saying 11:30. So it'll be okay right now until it falls thick. Spick.
What's your next target on the queues, Lord?
What's up?
What's your next target on the queues?
T1. 453. My original strike. Nvidia selling off again. I think I might be exiting here. Yeah, I'm gonna get out. I'm all out of the queues. I don't like what Nvidia's doing. Nvidia has a harmonic here on the 1 hour, calling for 103.01 PT1 to complete that, which would bring down the queues at SPY as well. Not much, probably back down to the HSI dot, maybe a little lower than HSI dot retest line, but if a 0 with high IV, yeah.
Lord, I thought they already had those H20 banned from China previously. Isn't that what they talked about, like, I don't know, a month or so ago?
No, they have the H100 bans.
That's what it was. Gotcha.
The H20s are the ones that they were allowed to sell to China. Well, not anymore, but yeah. Dang, did I paper hand here? Probably did. Oh well.
It bounced right off at FEG.
Fuck. What's it doing? Oh, it's okay. Hope it goes to 453. Solid volume here on this.
Sammy,
Yeah.
did you ever watch that Indian comedian I sent you like way back?
Indian comedian, which one?
Russell Peters?
Oh, that's the Canadian guy?
Yeah.
No, I saw a couple like clips and stuff.
Dude, what we're talking about just reminded me of a joke. He's like when God was making when God was making humans, he must have been pranking people. 'Cause he goes, Buddha, put down your drink. Come look at this. I'm gonna put these people in the hottest place in the world, and just for fun, I'm gonna cover them with hair.
I know he's funny guy. He's being like the robbery in a bank was good joke for Indian.
For real.
It looks like Spy may have double topped. If that's the case, my target would be back 530. Like, again, what you say, Lord, doesn't make sense to me about volume, because you look at the previous candle, higher volume than the previous candle before it. This current candle is more of an impulse move up on half of the volume.
What are you talking about, bro? Are you not saying it's because you're probably looking at your volume versus mine. Mine is just showing simple volume. This candle here has 1 minute and 15 seconds left, and it's already like 80% of the last candle. It's meeting up. It's gonna meet the same volume or even pass it. I think your volume, whatever indicator you're looking at, is showing you different things. I'm just looking at straight volume from what happens from the previous candle close. That's all mine is. That's where we're gonna have different things. Because look at this candle right now. If you're looking at just straight up volume, this already matched the previous candle. Spreads are the same, and you still got 30 seconds. 35 seconds. Last red candle here, that shooting star had 310,000 volume. This is at 307,000 with 15 seconds. Same volume. Obviously, I'm looking at the cues. On SPY, you had decreased volume.
Yeah, that's what I'm looking at SPY. I'm not looking at these. Yeah. But look at SPY's candles. The last 3 candles prior to the one that it's currently forming. The bearish candle had way more volume than the previous candle before it, and the candle after that bearish candle is lower volume, but it pushed up higher.
279K versus 332, and then the candle afterwards that you just got pop off was 255K. So if you're looking at this, what is telling you right now? This is why I have different sectors over here. So I follow tech and the blue chips. The blue chips right now, tech sold off, but tech is also pushing back up right now. Whatever's happening with the SPY is the other 500 companies that are within that ETF, right? Banks. Look at the banks. XLF pushing back up, not continuing to dump like JPM KRE here. Oh shit, AMC is falling to the downside. Yeah, it looks like tech is compared. Look at IQs, telling you that tech is right now trying to bounce. You still have all this even on SPY from like you can include this whole sell-off right here that you started. What was it? 1, 2, 4, 20, 5 4-minute candles, right? So 20 minutes here you had selling pressure, just increased volume, you sold off. But ever since then, volume has been decreasing. But how many candles are red here? 1, 2, 3, 4, 5. From 7 o'clock my time to 8 o'clock, so an hour and 10 minutes. But I'm telling you again, in an hour and 10 minutes, there's only been pressure on 5 candles in an hour and 10 minutes to the downside. And relative to the volume that I got in the morning, it's low volume. There's no like continuation, like 4 candles in a row that are telling you that where SPY, or the volume pressure at least, is telling you that there's volume pressure stepping up continuously. Look again here, SPY increased volume right now in the next 2 5-minute candles here. It's increasing. There's continuation. The bearish one over here, there was continuation here, but low volume and decreasing volume. The sellers are not stepping up. This candle right here, low volume, followed through with higher volume, and then these 2 candles were still less volume than the previous.
But this is a level where sellers stepped up, so you would, if they sold strongly from this level once, they're more than likely going to do it again.
But where is it then? It's not showing up. It's not consistent right now. The sellers aren't stepping up, and maybe they're waiting for something else more macro. But right now on the micro, it's not telling you that, at least how I'm seeing it. UVXY also just made an intraday low.
For me, I'm seeing sellers stepping up at 656 on Qs. That's where sellers are stepping up. But then buyers are stepping up at 600 on that FEG.
For SPY, this level here is very key level because you're about to, negate everything that you had in that early push down. So this is area where they should step up, but you're also not getting it. Like maybe you're waiting to something. Maybe you're gonna wait till Powell. Who knows? But right now you're not. You just kind of negated everything, but you're still at that same level where you sold off earlier, and the volume could still come in. See, this is a good candle on the downside. High volume on the 5. Let's see what happens on the follow through. You need continuation and follow through. SPY and the Q is different game though, because man, this is what's tricky right now. Something's selling off on the SPY, which I have no idea what. There's 500 companies, but the Qs, the push down on the Qs here on the 5-minute is low volume on that indecision doji candle. We'll see if that picks up. What's selling off here?
There's Dragon White Swan just formed on the 1 minute.
That 618 is key. I think the algo knows, or whatever you want to call it, that at the 618, if that shit holds and you continue buying pressure, you're gonna potentially start looking for that gap fill. And if you fail, you're looking for a lower low. So there's a battle here. You have to also realize that there was like that gap down we had today. We sold off pretty damn hard from yesterday, right after hours, and then we continued selling off in pre-market. A lot of the thing could also
We're in a bear market.
a lot of the pressure that also came down here. You may also test the pre-market lows. A lot of it could be profit taking. Maybe let it push up again and then wait to grab liquidity on the upside and then dump again. No one's denying the bear market. It's just a push up. You're not gonna just continue knifing all the time, especially
Yeah, I
at levels of
understand that.
support.
I'm just saying you can't be surprised by a push down and a continuation push down when we're in a bear market.
There is a possible case you do go to that 453 on the Qs here. You're forming an inverse head and shoulders here. I'm tempted to get back in. You can wait for the breakout, a retest, or be a degen and go in now, which I don't like. I don't want to do that, especially with where we're at. Because if you fail this area here, you're gonna come back down to the terminal bar. Basically intraday lows. And that breakout, if Powell's bullish, could be way higher than 4.21. Maybe even go completely bullish and recover the whole gap. The oscillator in the 2 hours telling you the HSI arrow is triggering here above the 250 SMA support. Ooh, compressed here. Like I said, if you break above this, you could push for that gap fill, and if you break below this, the compression poops. So it's kind of a big deal where it's at right now. A little compressed you are here too. HSI arrow on the 2 hour too as well. Holding above the 50 EMA. We're also holding above hop at 529.11 on the daily.
There had to be news for that candle.
Fuck, I knew it. Jesus. Somebody in those queues?
Yeah, I'm still in them, brother.
What was the news? Anybody out there with the news? Damn it. My 449s are up 469, almost $5 a contract. Also, if you held the 453s, those are up too.
No, everything's getting that same spike.
Okay. I knew it, I knew it.
Except AMC.
I fucking trimmed too much. I'm an idiot. Well, not an idiot. I just
Bro.
took too much.
We're gap filling. We hit forward to 3 yet? That fucking close. I was talking about that inverse head and shoulders. Damn it. It's okay. US Atlanta Fed GDP now, Q1 negative 2.2, previous was negative 2.4. Fed GDP now. The Atlanta Fed GDP estimate for quarter blah blah blah, indicating a slight improvement but still signaling economic contraction based on real-time data modeling without subject adjustments. A negative GDP growth rate, as reported, suggests a potential recessionary trend which aligns with global economic pressures like tariffs impacting export-reliant economies as seen in the Bank of Japan's planned forecast cuts April 16, 2025. The GDP now model detailed in Atlanta Fed research uses a bit blah blah blah. Bro, what was that in the economic calendar? Is it in there? Let's see. It's not in there. Chills. When the hell? Well, I guess we should pay attention to when the Fed GDP now comes out.
Yeah, they have an app now for GDP now. A lot of people using it.
Bro, you should be in charge of that. You like to look at GDP.
Yeah, you know me.
Down with OPP. Dang, Google. Rippin'. Gap filled on Google, on Amazon.
Wait, hold up. Did you say there was GDP release this now?
FDP, Atlanta Fed GDP now.
Oh, okay. Sorry, I was like, wait, where was that? Like, I didn't see that on any calendar. What is an Atlanta Fed GDP even?
No idea.
I know, who cares about Atlanta? Sorry if anyone's from Atlanta.
No, the thing is, that if you don't know the structure of the Federal Reserve, each like New York is each governing body is like they're responsible for different data. So the Chicago one is for the GDP. The Federal Reserve in New York is in charge of the balance sheet side.
Willie likes to smoke the GDP.
Hell yeah.
Okay,
Grok. It is a new thing that they're doing with the app.
So the Atlanta Fed GDP now is a forecasting model developed by the Fed of Atlanta to estimate the real-time growth rate of U.S. GDP for a given quarter. It's a nowcast, meaning it provides an estimate of the official GDP growth rate before the U.S. Bureau of Economic Analysis releases its data. The model is designed to mimic the BEA's methodology, aggregating forecasts of 13 GDP subcomponents using economic data like employment, manufacturing, consumer spending. They use a bridge equation approach to connect monthly economic data to GDP subcomponents, filing and missing data with economic techniques, blah blah blah. It's updated frequently, often daily, publicly available, and includes subcomponent details for deeper insight. It's been noted for accuracy since 2008. Projections tracked by the Philadelphia Fed's real-time data center have outperformed simpler models as economic blah blah blah. So yeah, that's what it is. But why don't they put that shit on the economic calendar? That shit is probably a thing to watch out for now. The fuck?
Yeah, that's weird that they don't have that on economic calendar. I that threw me off a little bit, but I mean, that helped me, so.
Yeah, you can download the app. It's good, but the thing is, a lot of
I don't want to download no Fed app, bro.
Bruh, I am the biggest.
Hey.
I hate apps.
Same.
I hate apps. They drive me crazy. I get like that.
Why?
That notification shit on my phone. Oh my god! Like I want to shoot myself sometimes.
So you just prefer going on the website?
Yeah, like I would much rather do it on a computer. Like I hate how much phones have controlled our lives. Like
Yeah,
obviously,
but outside
obviously it's made things like completely more convenient. Agreed, but like the amount of dependency and like just attention that it requires is just insane.
Yeah. Your tax-paying dollars pay for it.
Bro, I barely pay taxes. I'm foreign exempt. I told you.
Oh shit.
Dude, if you really want to know how to structure shit, I'll teach you some tips and tricks. Cause I paid like, I think my net taxes paid last year was like 12%, and I made over 140. Cause like you only get exemption on like 140, first 140,000 is only at a 10% bracket.
Bro, they're shitting on you on YouTube. Will.
What's up?
Who, me? Go ahead. What do you guys want to say?
Quinn says Willie said 21,834 words and only needs 7 to explain the Atlanta GDP.
Oh. That's how I feel like when Willie's trying to explain to me his TA. 21,000 words.
Defend yourself, Will. Just thinking of a comeback.
Willie, someone trying to fight.
That's Quinn, bro.
I'm working.
Slap him with the wet Willie.
You hoes don't pay my bills.
You should have hit him with a yo mama joke.
Your mother so fat that when she jumped for joy.
And then J Max says, and 3 of those words were roboting.
I'm dead.
I'm in the Forest Service area. That's I'm not saying shit. Go ahead. I'll see you guys later.
Lord, did you stop Twitch?
Just for the time being.
Okay.
Yeah, I'll be back.
Lord, was there a level there on queues? I saw that there was a PT1 dragon that like we just whipped right off of on the 5, but like is there another reason why we just like rejected that? So
I don't see, what dragon are you seeing on the queues?
I trailed stop, so I'm out.
I don't see a dragon on the queues.
Well,
NQ.
It's an old dragon. Sorry, NQ.
Oh, NQ. Oh, yeah.
Yeah.
Yeah, that's... There was one... There's also Harmonic on the HPC indicator earlier before this one that generated... We're calling 453. But it rejected exactly at the HSI.retest line here. No idea why. Besides that dragon.
Well, things might start flipping bullish here. 30-minute. About to create a FEG, broke CISD. Hour just broke a CISD.
Okay, it's just what can happen, guys, when you read the volume correctly. That's why I didn't get shit. I mean, fuck, that push down on the bottom, obviously. But I didn't think it was gonna do... I didn't think it was gonna continue. I was like, no. Re-enter again. I wish I would have fucking stayed. above the H side every test line to catch that pop, but nonetheless, there was no follow through on the volume, and it clearly showed that. That's why I got in the Qs. I was like, SPY a little bit not playing nice. The Qs was completely oversold, and that's because tech, what just sold off last night after the market, it was tech. It was specifically the semiconductors that caused everything. Now I think you consolidate here into Powell from Burgundy.
This was also a 618 from London highs to this morning lows retracement. That was like a strong wick off of that.
You could come back down for that FEG there. Or just don't pay it, Quinn. Just kidding. Don't do that. This is Walter Bloomberg 1 hour ago. Markets rattled by tariff confusion. Clearly, markets were shaken Wednesday after White House fact sheet mentioned China now faces tariffs up to 245%, much higher than the widely assumed 145. This sparked confusion, but the White House clarified that 245 figure isn't new. It includes existing tariffs with the 125 reciprocal tariff, 20% fentanyl, and 7.5 to 100% under Section 301. Bottom line, no new tariffs, just a misinterpretation. Still, the confusion highlights how complex and unclear the current tariff landscape has become, even for seasoned market watchers. It is all over the place, bro. I'm not gonna lie. It's so hard to keep up with everything.
Inconsistent, dumb shit.
And it's like the 90-day pause. They're like, no, we never said that we did. It's just on different thing. And it's like, bro, then be clear about it, because the market does not know what to do. And then you come up with the 245%, which now says it's only on certain things. And like, bro,
No, but
it's so hard.
I think that day for Trump's that day that like the market rallied like 8%, I was actually digging into it, and there was actually a separate reason aside from news driven. The market was completely out of liquidity for any more selling, and so a lot of institutions actually had to pick up shares at that level. And then obviously because liquidity was so dry, that's actually how the market pumped the way that it did.
That's crazy.
But the bond market is like, who's going to fund his new budget proposal that's coming? The bond market don't like it. They're saying, no, your shit is stagflation. We can't support that. So they asked him about the bond market. He was like, oh, it's tricky. And they asked him about, oh, where do you want the dollar to be, strong or weak? He asked his military guy.
Willie, you watched that video I sent you this morning? On I think it was on IG.
I didn't realize it was a video. Oh shit! I don't have Instagram, but I'll try again. I'm in a poor service area if you don't hear me.
Dude, when is Dogecoin going to $1?
Soon. Yeah, SPY's losing momentum here. From swing low to swing high, we just lost the 618, and now he looks like he could come back to the terminal bar. See, now there's pressure here with no selling, or no buying pressure. There's that FEG here you can come down to. He just broke below the 618, so see if it holds. Just, I think now is going to give us a range. This range here. Into PAL.
chat bears and bulls today. We chat bears and bulls. This shit is insane, dude.
Did you get stopped out of your puts?
You fucking know it.
Jeez, yeah, that's fucked. Yeah, because I was playing calls and I got trailed stopped, and then I was thinking of going downside, and then I didn't take it because we didn't sweep anything on the upside. And yeah, this
I'd
is
be up like 30% right now if I would've held him.
Yeah, I'd be up above 50% if I took those if I took it on this.
That's why I don't like
40.
setting stop losses.
Yeah, it's
Maybe.
tough because I'm not sure how much money you're playing with, but like it's hard to see, you know, like 3-5K just go to zero, you know. But then like at the same time, you know, you were right, you know, like we might. I think we're coming back down to 53.40 here now. Take out, what is it, Tuesday? Or sorry,
Got
Thursday.
11:20. Got 11:20 candles. It's just pure manipulation. Stop loss hunting.
Sorry, yeah, Tuesday 4-hour candle low here. We're gonna see what it does here because we got a bullish FEG and a defensive FEG right here. See if we take this out or not. I mean, you could still play downside. I do think that we take more liquidity from London lows here. That's another almost 80 point move, 75 point move. Rich, you're in zeros though, right?
Yeah,
Do you only ever play zeros?
usually, yeah. When I first started trading, I used to trade weeklies, and I got fucked so many times playing weeklies or holding overnight. Not that.
Yeah, but I feel like you
fucked
could
any
play
less
like
now.
1 or 2 day out and then not hold it overnight, and then, you know, at least like if it doesn't go your way, you're really down, you know, 20-30% of the position, and if it does, you can still see upside, you know, 50-100%. Like you're not gonna see those massive, like, you know, 2, 3, 4, 500%, you know, in the daily time frame without the overnight, but you'll still see, you know, a solid 50 plus if you go like 2 day.
Yeah, well, I was up 50%, and I should have cut my position when it was. Or I think it was closer to 60% there at the bottom.
Oh, you trimmed though?
Yeah, it took a little bit, but
Oh, okay.
I still wound up taking a small loss.
Oh, I mean, as long as you didn't take like, you know, a big loss on the entire position, that's you have to trim. I feel like in order to play this game. I don't know how some people don't trim.
It's called greed.
No, but like they just have like so much weight in their TA, which like I feel like, you know, if you're playing this game, you have to have it. Like Sammy, for instance, he almost does it. He almost never trims. Like he'll trim like 90% of his position at his target, you know, and then he'll let like, you know, 10% of it run. But like that's so hard to hold through.
Yesterday, I entered puts around 950, and then it ran up, and I was down like 70%. But then it just, like, I could tell that the push up on volume was bullshit. Like volume is important in my trading strategy. Like, and like, yeah, sometimes you'll see a lot of volume coming against you, but a lot of the times, from my understanding of the market, it's just a manipulation. It's either like grabbing liquidity from a fair value gap to continue the move because they need the liquidity to continue the move, or it's stop loss hunts because that's liquidity as well. That's why I don't like using stop losses. I can't stress it enough. Like, once you input that information in their system, they have that information.
Oh, I never actually input it. I just have it like mentally. I also don't put limit order ins all the time. Like, I usually mark it, like if it's like a SPY trade or something like that, I'll do that. Stocks, I'll put a limit order in. Like GME yesterday, I put a limit order in, didn't even fill. So stupid.
Yeah, I remember your lord got out at $1 and you couldn't get out at 97 cents.
Dude, that makes no sense.
Right.
That literally makes no fucking sense. I put that order in.
Different brokerage though. So.
Yeah, but I put that order in first thing in the morning. Like, so like I don't know. I just rolled them over.
Have different prices.
Yeah, I just rolled them over to June. I just took a hit on them this morning as well because it dropped. It's stupid. But at those plays, I don't put a lot of money in. I only put like $1,000 in it.
I just wish I understood the market better, like Sammy does. He's so sure in what he does. He has so much confidence in his trades. It's aggravating, honestly. Like,
I mean, like he will literally hold his position to zero. I played that one play with him. Well, I've actually been in a couple plays with him, but like he held 100 grand to like damn near zero. It was like down like 75% or something like that, 80%, and then he doubled down on the next play. Like even Sammy's strategy doesn't work 100% of the time, right? But he hits it at a high enough clip to where like the next play he'll double in on.
What's he bet, like Martingale?
Exactly. But like Martingale is such a scary strategy. Like I've lost so much money playing Martingale, like because to play a Martingale, you essentially have to have an infinite bankroll, which like no one really has unless you're playing a denomination that's so small. Like I play Martingale when I play Baccarat on the side, like, but I play like $2 a hand, you know, because I like, you know, at $2 a hand, $5 a hand, you can play for a very, very long time Martingale. But if you're playing, you know, $500 trading, you know, $1,000, $5,000, you know, like Martingale, that's nuts.
Yeah, and then you can lose like 10 hands in a row and your bankroll is gone.
So I tried that in roulette one time.
I don't think I ever lost 10 hands in a row in Baccarat. And I've played that game since I was 13. I'm 32.
I tried that strategy in roulette one time, and I don't know, I'm not a gambler, so I really don't know what, But what I didn't realize was the table had a limit. So once I hit that point, I was like, oh.
Yeah, that's how they get you. Is that table limit? Once you play like high enough though, like you can go to rooms that have no limit.
Yeah, that probably wouldn't be good for me.
Probably not good for anyone.
Yeah, no, that's a very scary game.
Casinos make money by taking years.
Yeah. Or like sometimes you see a rich Asian dude and he's just fucking on a roll. You don't do shit. You don't touch him. You don't share fire with him. You don't do nothing but follow whatever the fuck he does.
I've made some pretty decent money playing blackjack, but I haven't been to casino in probably 10 years. I don't want to say 10 years, maybe 8 years or so.
How old are you?
I'll be 40 this year.
Oh dang, haven't been to the casino since your young 30s, like early 30s?
Yeah, I used to play on a regular, and I would make like $200 or $300 a day.
Oh, that's fire.
On blackjack.
Yeah. What was your bankroll like?
I would take like 1,000 with me.
Dude, and that was back then. That was 8 years ago. That was really like $600 a day today.
Yeah. I mean, it's pretty decent. And I really wouldn't play that long, a couple hours maybe.
Yeah. That's there's two advantages casinos have against people. And it's one, your bankroll, and two, your time. Right? Because if you play long like the way that you should treat gambling is like at a job. You start and finish at a specific time. Like you play on a time limit. Because then like something gets you out, no matter if you're up, down, sideways, whatever, right? And you just do what you do in that time. But like if let's say you're on a hot streak, your luck, right? Because there is a very portion of this that is obviously luck. Eventually runs out, right? And then you get smoked.
Yeah, I learned that whenever they change the dealer, I get out, I walk away. Because I've had them change a dealer, and they're like called closers, and they come in and they just shuffle the cards because they would the casino I played in, they manually shuffled the shoes, and they would do it in a manner to where they knew they were gonna fuck you.
Well, see, that's why I don't like blackjack, because you can't choose to play the dealer's hand, right? Versus baccarat, you can choose to take the dealer's hand. So it's completely there's no one to blame, and the rules are preset, so it's not like you get to choose to hit or not hit, right?
Yeah, but if you can count in your head,
doesn't matter.
High-low system, you gain an edge. Yeah, because
I mean there is an edge, but it still doesn't make up the difference in terms of true percentages against baccarat. Baccarat's the highest percentage table game.
Yeah,
actually, I don't even know what that is.
Is that a card game?
I think I lied. I think Pai Gow is the highest percentage game because it's so hard in Pai Gow for you to lose. It's almost you might lose 1 every 3 or 4 hands, true loss, because most hands end up in a push because you get to formulate your hands. But yes, baccarat is a table game. It's a casino game.
Yeah, Baccarat is a card game. I never played it, but I've seen people play it. I've watched, like, I used to go around and watch, like, different tables and shit, just to see.
It's the best game. You don't have to make decisions. I lied. You only have to make one decision, and it's just whose hand do you want to play, the banker or the dealer, or sorry, the banker or the player.
Yeah, but can't you bet, like, it'll be a tie or something?
Yeah,
like
you
that?
could, but those are prop bets. You know, they pay like 8-1, 25-1, 40-1, 50-1, depending on the table that you play on. But those are all prop bets. Like I'll throw money at that once I'm like up 25% on my bankroll. It's like you betting lucky ladies on blackjack.
Sneaky, all this talk
Yeah, I
about
don't do that. I
Baccarat.
never took insurance or any of that shit. 'Cause it's-
Nah, you never take insurance. That's a loser's bet.
I
Unless
asked
you know,
my buddy.
like, unless you're really good at counting cards, like the dealers are, because they know how to count too, and they are counting.
Yeah.
Unless you can count like they can count, and you know that the dealer has a high probability of blackjack, then you take it, yeah. But outside of that, no.
Asked my buddy
The
about
problem
that
is,
game.
with blackjack, if you're counting, your betting strategy changes, and they're watching you. Where, like, if you have a count in your favor and you start betting higher, they know that you're counting. I've been walked off a couple times actually, so.
Yeah, I just got kicked out of the mansion in December. They booted me from the mansion. I'm trying to see if they'll let me back into any MGM casino, because like they have Aria, Caesars, all that's all under MGM. But yeah, they kicked me out of that. No, you should look into Baccarat if you're a big gambler. Like you're right, like you know, counting obviously gives you an edge, but even with that edge, it doesn't actually push your odds far up enough. And with Baccarat, you can just play unit strategy the same way you would with blackjack, and then when you win, you just progressive martingale, and then you double up, and then at like 2 or 3 double ups, you take back, and then you reset. Unless you're already up and you really want to gamble, then
I do all my gambling in the stock market now.
I pretty much just don't gamble when I'm sleeping.
Like, there's a website there you can gamble on, like futures, crypto, and like the different currencies. It's called Pocket Option, and you can literally bet on each candle, like whether it's going to close higher or lower than the previous one.
That's crazy. That's a whole nother level.
I watched a guy on YouTube go. He turned $10 into like 60K in 8 turns because he doubled his bet every time that he won. And he would just
Yeah, that's how I won like 125K with 5K. I took a $500 bet and I ended up playing like $25,000 hands. I actually got up to like 160 something at one point, but then I lost like 2 pretty sizable hands, and then I just cashed out. I had 15 players in a row, and I doubled all the way up until I hit table max.
Body's bear flagging right now. From that stupid manipulation high to the low is the 786. We're rejecting again off the 618. And if this is a bearish pendant, then it could come all the way down to the 1618, which is 526.29.
U.S. officials plan to use their trade negotiations with more than 70 nations to ask them to disallow China to ship goods through their countries and prevent Chinese firms from being located in terrorist territories to avoid U.S. tariffs. Yep, like we said yesterday, they're going to make them pick sides.
Got 1 more hour, Chair Powell.
Nice, 1 more hour of these 10-minute wikis, indecision candles.
dystopian nightmares. Human era. Infinity. On a distant planet. Our galaxy. Android. Evolution.
There's a SPY 1 hour chart pointing to downside with candle formation. Well, it is a shooting star in the 1 hour, but it's off decreasing volume from the open. You want follow through? I don't think you're gonna get it until Powell comes on. This hour candle right now, 23 minutes left. Kind of low.
There's a white swan on the 1 minute on SPY. Bearish. PT3 is 529.12. And it's retesting PT2 right now at 531. SPY's forming a bearish pennant or a flag. It looks more like a flag now. I think we're gonna retest intraday lows of 529.45, and if we break below that, then we're coming down to the 1618 at 526.29. Unless Papa Pal says some dumb shit and fucking market starts tripping. In my opinion, this is just my opinion, and I'm a fucking nobody when it comes to this shit, but economically, we have no reason to be bullish. At all. There's no reason. Tariffs going on, we're under trade wars. probably technological.
Shit, I
wars,
think
bro.
this goes all the way back down now. I was gonna see it. They had that 786 bounce. I was trying to reclaim the 618, but that just completely failed.
It's increasing volume on the selling on the 5. Also on the 10, creating a engulfing candle, bearish.
There's the tiniest of FPGs holding this right here. I think this is about to crack. Yep.
User bottom here. One minute.
Damn, this looks like it's gonna dunk, but I'm scared to get in. I'm so scared.
You broke London low yet?
We
I'm
broke
not
London
watching
low on NQ earlier, but we haven't yet come back down to sweep more liquidity. I think we need to. I just don't know. They're chopping it up here. Well,
Yeah,
here's the
they
thing.
were
There's two defensive FPGs on the 5 from London, and it's bouncing right off of there, which is also lined up with the 786.
Yeah, to break a session, you know what you need: a CISD breakdown retest with a bearish FPG, and you take it on the retest, in my opinion. But the 1 hour is not set up for me. You see how it rejected the 1 hour CISD earlier? Do I sound better? I'm still in the poor service area.
You sound a lot better.
Thank you, sweetheart. I think Lord is has the good mind of waiting.
We're gonna play through Powell.
Should we just take a YOLO, like one contract, just to see, one each way, just to see if we could more than 100%?
Only like $200-300 right now in the money ones, or out the money, the closest one.
Yeah, on Q is like 170. Probably gonna have to wait for PM session to sweep London again for that extra liquidity that it needs, and then play the wet willy up.
funny. Now that you're threatening a potential head and shoulders pattern here on both the indices. You had one earlier, which is the inverse. You can call that here. Break, and you got the break. Now you have head, right shoulder. You can argue that this is the left. Neckline's right here. To hop into Powell. Does the market give you both plays that play out here, both directions? That's something.
Just one of those flash candles that you need to have all your limit orders in for to get filled on. Cause like you know the
Yesterday.
second that motherfucker opens his mouth, like you ain't getting out. Your contract smoked. You can't. $1,030, right, Lord?
Yeah.
Is this FOMC talks or is this just him talking?
I'm talking about the economic outlook. That's all it says.
Okay.
He's there to calm the bond market down, in my opinion. If he agrees with Trump,
There's calming the bond market down. If we fuck China over, they're gonna do everything to fuck the U.S. over, and that includes dumping most of our bonds.
Yeah, but the bond market is not accepting his budget. His current budget that they're trying to pass this week or next week, something like that. Yeah, that's what I read from an article, not my opinion. The bond market is saying stagflation because of his budget policy. It's going to increase inflation while GDP is decreasing. If GDP was showing higher numbers, then they would have changed their minds. But since GDP is softening, and this budget is potentially going to inflate the prices of products and services. That's what stagflation, higher prices and slower GDP growth.
100%, but I think stagflation is a part of the cycle. You can't just infinitely remain in an inflationary or deflationary environment. So,
But
like,
this is just them forecasting. This is their forecast. I don't know.
no, yeah,
Han, I don't know. Tesla here had that death cross last week, but the volume is diminishing, and you have earnings for Tesla next week, so I have a range between 258 and 223. You could get down there, but the volume is decreasing. I don't know. I think it's just gonna hover around here until earnings. Remember, OPEX is also on Friday, but Friday is closed, so maybe you get something tomorrow on Brown Burgundy. I don't know. I think you could consolidate until next week when the blue chips start reporting.
U.S. has generated 21 billion in tariff revenue. So pretty much nothing.
The thing is, Sneaky, he's proposing, you know, he just got the presidency, right? So every president at the first beginning of their term, they submit their budget proposal on what they want to spend their money on, you know, for his term. And who supports the budget? The bond market. Am I wrong?
No, you're right there.
Yeah. So that's why they are not agreeing with him. Every time he announced tariff, the shit dropped. And people run into gold. When was the last era we had stagflation?
Didn't we have that in Obama's term?
I know someone said the 70s.
I thought we had that during Obama's term, no?
It was talks of a risk, but did we have it?
I can't remember, to be honest.
I smoke weed. I can't remember all this stuff. Lord help.
I don't know.
I miss Lakshmi. Where is she?
Sleeping.
That's nice.
The last stagflation was 70s and early 80s.
Yep, 70s. That's what Jim Croissant. If you, that was a good conversation that Sam had posted recently. Great perspective, that dude, and that's where he compared it to. So the 70s. I'm gonna look at the price chart on gold and see if everyone ran to gold. Man, Jack called this out since November. He's like,
gold is flying. Gold just fell on highs yesterday, I think.
Yeah. Jack called that shit out back in November. This dude was like, I see equities going down. People offloaded equities. His budget proposal is going to increase inflation. This is not good. And he was right on the money.
Bro, in reality, my put play, I was just a year too early on. I should have bought that shit way longer out.
You needed a sweep and a wet willy. With the harmonica.
Yeah, we should be taking London lows here soon. Like 30 points away.
Isn't it interesting they're doing it? This is happening 20 minutes before Powell.
Right? If they give us that wet willy before Powell, I might fucking just hop in there with a lighter load. Reggie, did you take downside? Like, did you re-enter or not?
You didn't call me, right? You called Richie.
Yeah, Richie. Damn, someone just pointed this out. Nvidia right now is trading at less than half of the forward PE of Costco. I don't know how I feel about that.
Yeah, the thing is, it's hard to guesstimate, to project anything on
Yeah.
their PE.
I'm also very scared of going into a play like Nvidia right now. Like I've been buying very, very little bits of tech because I have seen tech literally lose 70, 80% in a bear market. And
Oh yeah,
and I mean, don't get me wrong, I definitely think that it's opportunity to take it at, 30, 50, percent discount from recent highs, but like I'm not holding my breath, for it to like swing back up anytime soon. I think if things go south, we could see another, 20, 30% from here. Just look at what Nvidia or like Tesla did just recently back in, I think it was end of 2022 or
Yep.
during 2022. I think it took like a 75% haircut by the end of the year, like that December. So I remember that was when my stepdad and I picked up a bunch of Tesla shares.
There was the news was it was a chip shortage, quote unquote.
It wasn't even that. The entire market was down at that time.
No, but that was the excuse. It's bullshit. It's bullshit.
Oh,
I say quote unquote. It's a power struggle between the empires, and they're fighting over Europe. Who's going to take Europe as the potter? The U.S. or will China take it? They playing around right now. I don't know shit.
All right, Powell, guys.
Lord, just 3 minute speech to talk.
Oof, stuff's going down.
He hasn't even said a thing. Sheesh.
I thought he had. Walter Bloomberg saying Powell says economic impact of tariffs larger than expected. So far, larger than
Everyone,
expected.
once
Tariffs
again,
likely
please
mean higher
welcome
inflation,
past
slower
chair of the
growth.
club,
Administration's
Deborah.
policies still evolving. Effects remain highly
Of today.
uncertain. Growth likely slowed in first quarter of 2025 from last year. Solid pace.
To the importance and the timeliness of
Damn, I
topics
guess,
and speaker.
bro, the lives? He's not,
Today,
he's not even
we have the
talking
great
yet.
privilege
Yeah,
of
I'm not.
hearing
It's not
from
on
the
live.
Honorable Jerome
Whatever
Powell,
stream I'm on is
Chair of the
delayed.
Board of
I'm
Governors,
getting this from
program
Twitter.
live.
Jesus, okay, well. We're not gonna be able to listen then. It's delayed. Big time. They released his pre-written statements. So he's still gonna talk. Okay, so let's see what questions they ask him, or if they get to ask any questions yet.
For you, to introduce our guests, two of the firmament of economics and finance. First, let me introduce the moderator, my friend and 40. He's since over age 40, but he was the inaugural winner. He is a member of the Group of 30, and he was the 23rd governor of the Reserve Bank of India, and before that, chief economist and director of research at the International Monetary Fund. You probably know him as a regular contributor to the Financial Times. He speaks extensively on economic and financial issues. Please give a warm welcome to Professor Rajan. And then our featured speaker will be Jerome Powell, the 16th chair of the Board of Governors of the Federal Reserve System. As head of the U.S. Central Bank, as you know, Chair Powell plays a crucial role in the country's monetary policy, oversees major financial institutions, and maintains economic and financial stability in this country. He was first appointed as a board member of the Fed by President Obama in 2012. He was subsequently elevated to chair of the Fed by President Trump in 2018, and then renominated to his post by President Biden in 2021. He has the respect of members of both parties, and I believe that no one as Fed chair has ever had to deal with more and varied challenging issues than Chair Powell has had to deal with. From the pandemic to fighting inflation to bank runs and on, his leadership at the Fed has been a steady hand and one of the all-time greats. Before coming to the Fed, Chair Powell was a visiting scholar at the Bipartisan Policy Center in Washington, D.C. He first entered public service at the Treasury Department under President George H.W. Bush, with responsibility for financial institutions, the Treasury debt market, related areas. Outside of public service, Chair Powell has worked as a lawyer, an investment banker, and been a partner at the Carlyle Group. In addition to his service on corporate boards, he served on boards of charitable and educational institutions, including the Bendham Center for Finance at Princeton and the Nature Conservancy of Washington, D.C. and Maryland. He is a D.C. native, received a BA in politics from Princeton and a law degree from Georgetown University, where he was editor of the Georgetown Law Journal. Please welcome to the Economic Club of Chicago
PJ,
again,
you got a hot mic.
Chair Jerome Powell.
Thank you and good afternoon. It's great to be back in Chicago. And thanks for that kind introduction, Austin. So I'm looking forward to our conversation, my conversation with Professor Rajan Raghu. But first I'll briefly discuss the outlook for the economy and monetary policy. So at the Fed, we are always focused on the dual mandate goals that Congress has given us: maximum employment and stable prices. Despite heightened uncertainty and downside risks, the U.S. economy is still in a solid position. The labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective. Turning briefly to the incoming data, we'll get the initial reading on first quarter GDP in a couple of weeks. The data we have in hand so far suggests that growth has slowed in the first quarter of this year from last year's solid pace. Despite strong motor vehicle sales, overall consumer spending appears to have grown modestly. In addition, strong imports during the first quarter, reflecting attempts by businesses to get ahead of potential tariffs, are expected to weigh on GDP growth. Surveys of households and businesses report a sharp decline in sentiment and elevated uncertainty about the outlook, largely reflecting trade policy concerns. Outside forecasts for the full year are coming down, and for the most part point to continued slowing but still positive growth. We are closely tracking incoming data as households and businesses continue to digest these developments. In the labor market, during the first 3 months of this year, non-farm payrolls grew by an average of 150,000 jobs per month. While job growth has slowed relative to last year, the combination of low layoffs and lower labor force growth has kept the unemployment rate in a low and stable range. Meanwhile, the ratio of job openings to unemployed job seekers has remained just above 1, near its pre-pandemic level. Wage growth has continued to moderate while still outpacing inflation. Overall, the labor market appears to be in solid condition and broadly in balance, and is not a significant source of inflationary pressure. As for our price stability mandate, inflation has significantly eased from its pandemic highs of mid-2022 without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. Progress on inflation continues at a gradual pace, and recent readings remain above our 2% objective. Estimates based on the most recent data from last week show that total headline PCE prices rose 2.3% over the 12 months ending in March, and that excluding the volatile food and energy categories, core prices rose 2.6%. Looking ahead, looking forward, the new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. These policies are still evolving, and their effects on the economy remain highly uncertain. As we learn more, we will continue to update our assessment. The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs. Survey measures of longer-term inflation expectations, for the most part, appear to remain well anchored as well. Market-based break-evens continue to run close to 2%. So, as we gain a better understanding of the policy changes, we'll have a better sense of the implications for the economy and hence for monetary policy. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully to prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. As that great Chicagoan Ferris Bueller once noted, life moves pretty fast. For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. We continue to analyze the incoming data, the evolving outlook, and the balance of risks. We understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. We will continue to do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to our discussion.
Thank you very much, Chair Powell, for those remarks. I look forward to your elaborating on them in the course of the next 40 minutes or so. I understand last time you were here, Melody Hobson interviewed you. Well, I'm a poor substitute, but I'll try and compensate in the quality of the questions. As you repeatedly emphasize, communication and transparency are very important for the Fed. I would like to get more from you on some of what you just said. As a former central banker, the only sort of caution I've been given by the Economic Club is to not lapse into central bank speak. So I'll try my best not to do that. Let me start by saying you've guided the Fed through some really difficult events, including the pandemic, the dash for cash in March 2020, the great inflation, the banking crisis centered around Silicon Valley Bank, and then over the course of the last year, we've seen a growing possibility of a Fed-engineered soft landing. And now, it seems like everything has changed. In the course of a couple of months, JP Morgan has shifted to estimating the probability of a recession this year at around 60%. What do you think about all this?
Well, first of all, thank you for being here today. It's a pleasure to be here with you. Actually, the the appearance I did here was my very first appearance as chair 7.5 years ago, so it's great to be back. And I would agree with you that it's been an eventful 7 years. Putting it mildly, I keep waiting for the 3 months of calm, that never comes. But to your question, I guess to set the stage, let's look back at 2024. 2024 was a year where the economy grew 2.4%. Unemployment remained in the low fours, close to mainstream estimates of maximum employment, and inflation came down and was running at the end of the year around 2.5%. That's the economy that we had, and I won't decide how to characterize that, but that's where things were. Where we are now, again to your question, is the administration is, as I mentioned in my remarks, is implementing significant policy changes, and particularly trade now is the focus. And the effects of that are likely to move us away from our goals. So unemployment is likely to go up as the economy slows in all likelihood, and inflation is likely to go up as tariffs find their way, and some part of those tariffs come to be paid by the public. So that's the strong likelihood, and my hope is that we'll get through this and get back. Well, we're always going to be aiming for maximum employment and price stability. That's what we do. I do think we'll be moving away from those goals probably for the balance of this year, and then, or at least not making any progress, and then we'll resume that progress as we can.
Let's talk a little more about tariffs. I mean, you recognize that some of the effects of the tariffs will be one-off, transitory, but you also have said that perhaps they will give room for a number of firms to raise prices. You mentioned dryers. When washing machine prices went up because of tariffs, dryer prices also went up in tandem, even though they weren't tariffed. What's your sense about the effects of tariffs on inflation? What would make them more persistent? And what would make them have effects on growth?
So in a kind of a simple starting point is one tariff comes in that gets passed along in prices and raises inflation, but it's just a one-time thing. So the price level goes up, and that's it. But that can happen in some circumstances, but it depends on a number of things which we don't know yet. And I would point to a couple of them, or three of them actually. One is just the size of the effects, and as I mentioned, the tariffs are larger than forecasters had expected, certainly larger than we expected, even in our upside case. We looked at a range of cases. So that's one. The second one is how long does it take for the tariffs to have their effects on inflation? To the extent it takes longer and longer, that raises the risks that the public will begin to experience higher inflation. They'll come to expect it, and companies will come to expect it. So that risks higher inflation. And the third is just what I mentioned in my speech, which is my remarks, which is got to keep inflation expectations well anchored. So if we have those three things under control, that's what it will take. And indeed, our role is to make sure that this will be a one-time increase in prices and not something that turns into an ongoing inflation process. That's a big part of our job.
What about the effects of tariffs on quantities? With the level of tariffs that, for example, have been currently applied on China, there's a fear that the supply chain may get disrupted, that firms may not be able to import their relevant stuff from China given the level of prices. If it turns into a supply shock, would the Fed's response be different than if it was primarily something which affected just prices?
So I actually had dinner at the Chicago Fed last night and with a number of directors of various parts of the Chicago Fed, and many of them are CEOs of significant companies, and they this uncertainty that they're feeling and the issue with imported components to their products is just a huge issue. But with if you look back at the pandemic, if you remember, there was a shortage of semiconductors, and that led to a shortage of cars at a time of extremely high car demand. And it was a prolonged shortage because production couldn't keep up. And that led to an extended period, one of the things that led to an extended period of inflation. So when you think about supply disruptions, that is the kind of thing that can take time to resolve, and it can lead what would have been a one-time inflation shock to be extended, perhaps more persistent, and we would worry about that. In this case, you can look at the car companies, which their supply chains are likely seem to be on track to be disrupted significantly, and you would worry that that process will take some years and that the inflationary process might be extended. So these are all of this is highly uncertain. We're thinking now really before the tariffs have their effects as how they might affect the economy, and that's why we're waiting really to see what the policies ultimately are, and then we can make a better assessment of what the economic effects will be.
Let's move to immigration. You talked about the labor markets being in reasonable equilibrium right now. Of course, what we've seen over the last few months, the last months of the previous administration continuing into this administration, is immigration has fallen off considerably. What's your sense on how that will affect the labor market?
So part of why growth was so strong in the last couple of years was just very high levels of immigration, and those people went to work. The economy hired them. There was a lot of demand. We were still working off the labor shortage. What's happened since the prior administration changed their policy, as you mentioned, immigration has fallen very sharply, and therefore the growth of workers has really stopped. It's really stagnant. But at the same time, demand has also fallen. And so demand for workers, so payroll job creation has also fallen, and they've kind of fallen in tandem, which is why the unemployment rate has been pretty stable for about a year. So in a way, demand and coincidentally perhaps to some extent, demand and supply for workers has fallen. In terms of the effect on the labor market, right now we're still at full employment. And labor force participation is still strong. Wages have moved back down to levels that are now pretty sustainable, given an assumption about productivity. So the labor market's in a really good place. Longer term, the effects of immigration are not thought to matter much for inflation. The effects on demand and supply will more or less cancel each other out. So we wouldn't expect there to be a big impact on inflation.
You've seen in recent weeks substantial talk about layoffs in government, as well as freezes in research establishments and universities in jobs. How soon and how big will this be in its impact on labor markets?
So it's too soon to say, but what I can say is, of course, the people being laid off in government, this is highly significant to them. We don't know how big that's going to be. Right now, it's not big enough to affect a workforce of 170 million people materially. In terms of the cutbacks in funding and for science and things like that, we do see in areas, particularly in cities that have a lot of universities and research hospitals and research institutions, we're really hearing significant layoffs and significant impacts on employment. I don't know how much that will total up to. And of course, In addition, cutting back on scientific research may have implications for economic growth, for productivity, for health, for all kinds of things, but those are very difficult to estimate in real time.
Now, given that we're talking about the future, you may be confronted in the not-so-distant future with both higher levels of unemployment as well as potentially higher inflation. And of course, the policies that each one requires could be different. You talked a little bit at the podium about how the Fed would see these two and how it would address it. Just giving you a chance again to elaborate on that.
Right, so most of the time, when the economy is weak, inflation is low, and unemployment is high, and both of those call for lower interest rates to support activity, and vice versa. So most of the time, the two goals are not in tension. And they're not really in tension now. The labor market is still strong. But the shock that we're experiencing, the impulses we're feeling are for higher unemployment and higher inflation. And our tool only does one of those two things at the same time. So it's a difficult place for central banks, to be in terms of what to do. And so the best we can do is we actually have a little provision in our consensus statement, which is the thing that we vote on to embody how we approach these questions. What we say is we will look at how far the economy is from each of those two goals, and then we'll ask, might there be different paces at which they would approach those goals? We'll look at those things and think about them, and we'll make what will no doubt be a very difficult judgment. Again, we're not experiencing that now, but we could well be in that situation, as I mentioned in my remarks.
Just want to pick up on a word that is often used today, uncertainty. As a respondent to a Dallas Fed survey said, I've never felt more uncertainty about my business in my entire 40-plus years career. The worry today is not just about immediate policy uncertainty, but an entire change in the U.S.'s economic philosophy. Not just policy uncertainty, so to speak, but structural uncertainty. One of the effects, as you've pointed out, of higher levels of uncertainty is that firms postpone investment. For instance, even after the tariffs stabilize, firms that contemplate reshoring production facilities will hesitate, not knowing if the tariffs will be reversed in the future, maybe by the next administration. How do you take such longer-term uncertainty into account in your policies?
Let me just agree that what comes back very strongly, and everyone will understand this. These are very fundamental changes in, long held in some cases, policies in the United States, and there's not any real experience. I mean, the Smoot-Hawley tariffs were actually not this large, and they were 95 years ago, so there isn't a modern experience of how to think about this. And businesses and households are saying in surveys that they are experiencing incredibly high uncertainty. There's a lot of research, some of it from the Fed, showing that does lead to businesses and households stepping back from decisions, which of course makes common sense.
First trim here at 51% profit on SPY.
And then you know what things become more certain, and therefore people can resume normal economic activities given their understanding of what is the new normal. I mean, your question really is, what if the uncertainty remains high? I think that's a difficult environment. I think people's expected rates of return would have to be higher. I think that would weigh on, to me, investment just in general. If the United States were to become a jurisdiction where risks are just structurally higher going forward, that would make us less attractive as a jurisdiction. We don't know that at this point, but I think that would be the effect.
Well, let me turn to financial markets. We've seen some volatility, especially stock market volatility. I mean, the levels of the VIX are up to the levels they were in the early days of the pandemic, coming off somewhat now. Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing what's going on, and it's really
103% profit here on
policy.
SPY.
And really the question is, where's that going to come in? Where's that
What
going
a
to land?
play.
And we don't know that yet. And until we know that, you can't really make informed assessments.
There's
that will still be
524,
highly
guys.
uncertain
That's
once
the
you know what
HSI dot
policies
retest
are.
line here on the
Still be
1
highly
hour.
uncertain what the economic effects will be.
That's
So
where we're bouncing
markets
off
are
of.
struggling with a lot
This
of
can continue to
uncertainty, and that
522,
means
but
volatility.
respect
But
this
having
level
said
here.
that, markets are functioning.
Hell, we can go
Conditional
back
on
to
being in such a
520,
challenging
but
situation, markets are doing what they're supposed to do. They're orderly, and they're functioning just about as you would expect them to function.
So we've seen volatility also in the bond market, and at a time when usually there's a flight to safety, we saw yields on the German Bund and the
Harmonic.
Japanese government bond come down, but we saw yields on U.S. Treasuries go up. What do you attribute this to?
So I would just say the same thing. I think it's very hard to know in real time. I've had a lot of experience with significant moves, for example, in the bond market, where there's a narrative that people land on, and then 2 months later you look back and go, that was completely wrong. So I think it's very premature to say exactly what's going on. Clearly, there's some delevering going on among hedge funds in levered trades and things like that. It's also, again, it's the markets processing historically unique developments, and with great uncertainty, and I think you'll probably see continued volatility. But I wouldn't try to be definitive about exactly what's causing that. I would just say markets are orderly and they're functioning kind of as you would expect them to in this time of high uncertainty.
So the Fed in its last meeting slowed the pace of shrinking of its balance sheet. Was this driven by uncertainty about how much reserves and liquidity the market needed, and you wanted to take a little more time to find that out? And flip side, you said the market was orderly. What if market disruptions emerge? Would the Fed intervene?
So we think that reserves are still abundant. So we don't think we're close to the point, particularly close to the point where we would stop. But we were facing a situation in which, for other reasons, there were going to be big flows into and out of reserves as it had to do with the debt ceiling and the Treasury General account. For those of you who are Treasury
I'm
market
out on
people,
the runners.
that'll make sense. But
Nice
while
play there.
those big flows are happening for over a period of 6 months, we would actually be shielded from being able to see evidence that we were or were not getting close to the level of less abundant reserves. And so we decided to slow the pace. We thought about pausing, and instead we debated.
Anybody
one of
catch
the
that one?
debates that we have at the FOMC. We decided to slow the pace instead.
We have paper handed the last three runners.
Because, the slower we go, the less the smaller the balance sheet can get without disruptions. And we want that process to continue. And now it's at quite a slow pace. So we think that's a really good thing. So that means it can go on for a longer amount of time, and we'll be able to reach kind of very carefully what we think is the right level of reserves. Still plenty of reserves.
What about the international dollar-based system? With all these disruptions, do you stand ready to supply dollars to central banks as you've done in the past, when there's been a global shortage of dollars?
Sure, absolutely we do. Just for everyone's knowledge, we have standing dollar swap lines with 5 large central banks, and they go to the jurisdictions where there are big overseas dollar funding markets. And in fact, those are overseas markets where, for example, a European or Asian institution is buying an asset-backed security that is backed by loans to American consumers. So in effect, these are loans to American consumers, and we support that. We want to make sure that dollars are available. They need dollar funding to hold those dollar assets. So the way it works is, when needed, we lend to the central bank in dollars, and they pay us back in dollars. They then pay in their currency. They lend on in dollars, and so we take no credit risk or anything like that, and it supports dollar funding markets. Dollar funding markets are very sensitive during times of crisis, and it's very helpful. The reason we do it is it's really good for U.S. Consumers. So we'll continue to do that, just as part of the dollar being a reserve currency, the reserve currency, most important, and we will do that.
You mentioned amongst the issues you were focused on was the U.S. fiscal situation. Well, clearly, U.S. sovereign debt continues to rise. And what are your thoughts on the longer-term implications for interest rates and economic stability? How much further can we go in terms of national debt before we cross a line that might be unsustainable in the long term?
So the U.S. federal debt is on an unsustainable path. It's not at an unsustainable level, and no one really knows how much further we can go. Other countries over time have gone much farther, but we're now, we're running very large deficits at full employment. And this is a situation that we very much need to address. Sooner or later we'll have to, and sooner is better than later. In terms of, if I can save from my time working on these issues, it's not the Fed's issue, but if you look at a pie chart of federal spending, the biggest parts and the parts that are growing are Medicare, Medicaid, Social Security, and now interest payments. And so that's really where the work has to be done. And those are issues that can only be touched on a bipartisan basis. Neither party can figure out what to do without both parties being at the table. So that's critical. All of domestic discretionary spending, which is essentially where 100% of the conversation is small as a percentage of federal spending and is declining it's already declining as a percentage of federal spending. So when people are focusing on cutting domestic spending, they're not actually working on the problem. Domestic discretionary spending is already going down. I like to make that point because so much of the dialogue that the politicians offer is about domestic discretionary spending, which is not the issue.
Well, let's turn to stability and regulation. Turning to the U.S. financial sector, we still have some concerns about distressed commercial real estate loans on bank balance sheets, whether they've been fully dealt with so far. There's some sense that they haven't. Add to that the very rapid growth in various forms of private credit over the last few years, which arguably haven't been tested by a full-blown recession. How would you put the resilience of our financial institutions at this point and their ability to weather potentially uncertain times?
So I think our banking system is well capitalized with liquidity and is quite resilient right now to the kinds of shocks that it may face. I do believe that. In terms of the commercial real estate, there are, and this has been the case, really we've been working on this for 4 or 5 years now. There are some banks, it's mostly medium and small size banks who have elevated concentrations of commercial real estate, some of it troubled, and we've been working to make sure that those banks have a plan, have capital, and can absorb the losses that they're doing. So, and that's been going on for some time. The very largest banks don't tend to have high concentrations, so this is a problem that we have known would take years to work through, but we're really well into the process of working through it. In terms of the non-bank financial sector, it's grown enormously. The provision of credit by non-banks
Guess that was a solid exit. Hell yeah.
Really fast. Most of it has been funded, though, with a private equity-like structure where it's limited partners who are signed up for 10 years to a general partner to invest that money. They're not depositors who can run. Your money's committed. And so that funding model is kind of run-proof. That isn't some law of nature, though. So when you do start to see shorter-term funding creeping in, to your point, though, Raghu, this very fast-growing and now quite large private credit part of the economy has not really been through a significant credit event or significant. It's really grown since the pandemic. And so just for that reason and for how fast it's growing, we have a close eye on it. It doesn't have the same kind of prudential regulation, though, that the banking system has. So we're watching it carefully. And as I mentioned, it's a more stable funding source to the extent its institutional investors signed up for a long period. But we're watching carefully.
Right. Wearing my banking research hat, actually banks are also involved in funding these institutions in a big way.
Yeah.
we do know the administration wants to relax regulations in many areas, one of which may well be banking. What can you tell us about the Basel III endgame, so to speak, which is, at this point primarily focused on additional capital for the large banks?
The Fed view, and my view, is that we should proceed to complete the Basel III accord, and we would have to do that, and would look forward to doing that in conjunction with the FDIC and the OCC. But our view is, and I think the bank's view as well, is we should complete that. You need international minimum standards. That's kind of a common good, and we're not bound by them. Really, nothing. The United States has plenty of input into what those accords contain. So our view is strongly that we should complete those, and we could do it, I think, relatively quickly. We're not so very far away from what would be a good, I think, outcome.
Well, let me move to something which is more about technological change and new kinds of instruments, cryptocurrencies. How do you see the potential for more favorable regulations coming on them, and potential risks from that for the system?
So we went through a wave of failures and fraud and things like that were the headlines for a couple of years, and I think what you see now is, and during that period, by the way, we worked with Congress to try to get a legal framework for stable coins, which would have been a nice place to start. We were not successful. I think that the climate is changing, and you're moving into sort of more mainstreaming of that whole sector. So Congress is again looking at both the Senate and the House are looking at a legal framework for stable coins. Depending on what's in it, that's a good idea. We need that. There isn't one now. And stable coins are a digital product that could actually have fairly wide appeal and should contain consumer protections of the typical sorts and transparency, and that's what the Senate and the House are working on. So that's a positive thing. I also think some of the, we took a pretty conservative, and other bank regulators took an even more conservative perspective on the guidance and rules we imposed on banks. I think there'll be some loosening of that, and I think we'll try to do it in a way that preserves safety and soundness, but that permits and fosters appropriate innovation, but that does so in a way that again doesn't put consumers at risk in ways they don't understand or make banks less safe and sound.
You have a policy review underway. Now, surveys recently tell us there seems to be a distinction between a rise in the level of prices, which is what the public seems to worry a lot about, and the rate of increase in prices, which certainly they worry about in passing, but the Fed worries much more about. That is the rate of inflation. So even though we're coming down to 2%, people remember that over the last few years, it's been over 20% increase in prices. So as you start thinking about the policy review, is there any thought about how you might want to address this sort of challenge, that it's the path of prices as much as the rate of change which matters?
First of all, I think you're right, and I think the public is right. When we say inflation is back down to 2%, 2.5%, and we think that's a good thing, it is a good thing. But if you're paying 20% more than you were paying in 2021, that doesn't help you much. You're still paying a lot more than you used to be paying for the necessities of life. So it's just another way of saying people hate inflation, and it's easy to understand why. All we can really control is a world in the world we're living in, prices don't go down in the aggregate except in extreme times that we don't want to court. So I don't think we couldn't have a framework where we're going to bring prices down by 10% or something. That's not something we'll be looking at. We're essentially looking at the best way to foster 2% inflation over time. And the things we did back in the changes we made in 2020 were really innovations around what to do when you're stuck near zero. Now we're well above zero, and it may be that we still need to have the main case is not one where you're dealing with the effective lower bound, and that would be a framework that looks a lot more like the one that we had before 2020.
Now, one of the tools you brought in to deal with the zero lower bound was quantitative easing. But you've also used quantitative easing to fix disruptions in the financial markets. Are you going to be more specific about what your objective is with quantitative easing as you go through this review?
So in the beginning, it's typically we're using it for financial market function. That was the case with the global financial crisis and with the pandemic. And we did try to explain ourselves through the pandemic, and our explanations did change. But I think it's fair to say we might have done a better job of being clear about why we were doing, and that's something that we're aware of and looking at.
I mean, no discussion is complete without talking about AI.
Yeah.
With AI coming fast and furious, it could affect productivity, it could affect employment. There are some people who say we will see for the first time technological unemployment in a serious way with AI. What are your thoughts about it, and how will it impact the Fed going forward?
So like everyone who's been exposed to what it's capable of, it's beyond, I started thinking about it as a version of Google, but it's not. It's like a better version of a person, it can do amazing things, and so the question is, all through the 250 years of technological innovation, technology evolves and people worry that it's going to replace human labor and people will be unemployed, and that hasn't been the case. It may be the case in the short run, but in the long run, what it's done is raise human productivity and therefore living standards. So is this going to be the case where it eliminates more jobs than it creates? And we just don't know. You come back in 20 years, will it be the case that just people are much more productive in their work because of AI? Or will it be the case that AI has just replaced a lot of people? And I think it's very hard to say, but it truly is remarkable in what it's capable of. And it's, we had a demonstration by a Wharton professor recently, and you speak to it like it's a person, and it kind of responds like a person. And the things that it can do are really amazing. By the way, this is early days. They're talking about even the next couple of years will bring more dramatic breakthroughs. So I think it's one of the 2 or 3 things most likely to bring dramatic change to the economy all around the world in the next 20 years. And I'd say very hard to say how it shakes out.
Let me turn to your job. An important man once said of your job, it's the greatest job in government. You show up to office once a month and you say, let's see, flip a coin. And then everybody talks about you like you're a god. What is it that you normally do every day in the office? Is it fulfilling and, dare I say, enjoyable? And do you really feel like a god?
So I would agree. I think it's the best job in government. I would agree. I really do enjoy it. Yes, I love the job. It's a great honor to serve. It's quite humbling because everybody makes mistakes. It's just the economy is just not very predictable. All of that is true, and I do what everybody expects me to do. I read. We do a little more reading though as part of our daily. My colleagues and I do part of our daily regime than a typical executive would do. In terms of being a god, I would say that we are blessed with a large number of amply compensated critics who would kind of tend to undercut that. So we don't feel like a god.
So let me go to the more mundane. In that office, what are the key indicators you look for? What are the sources of data that you go to as you try and make up your mind?
So I'd say start with labor. There's more labor market data and better reliable labor market than probably anywhere else, and it's just a lot of data. And it's new jobs, it's payroll, it's wages, it's participation. You can break all of those down in different categories. It's a million different things. So there's a lot of labor market data. It's a great field if you're going into economics because there's just so much to do. So and then we look at the inflation data. Also, I keep track of global developments pretty carefully, and I talk to my global counterparts pretty regularly just to stay aware of what's going on. Financial markets are really important, and you can and lately something that we're paying close attention to, as you would expect, what's going on around the world in currency markets, in fixed income markets, in equity markets, all of that. For me, though, my background was more in the private sector and as an investor, and for a significant part of my career. And I have to talk to outsiders about what they're seeing and what they're dealing with for it to really kind of fit together for me. I can look at only so much data, and but to really get the story and the narrative, it's more talking to outsiders, and anecdotal data does help things kind of fit together for me, I would say.
Yeah, you told us about speaking with business people last night and getting a sense of what was going on in the Midwest. Let me turn to Fed independence. You've reiterated that you intend to stay in office until the end of your term, and that certainly reassured many in financial markets. What are the levers the government or the legislature have to pressure the Fed? And should one worry about threats to the Fed's independence once you're gone?
So our independence is a matter of law. Congress has, in our statute, we're not removable except for cause. We serve very long terms, seemingly endless terms. So we're protected in the law. So Congress could change that law, but I don't think there's any danger of that. Fed independence has pretty broad support across both political parties and in both sides of the Hill. So I think that's not a problem. There's a Supreme Court case people will have read probably in today's Journal at which the Supreme Court may decide whether independent agencies generally, whether their authorizing laws can contain a provision that prevents the president from firing members of a commission other than for cause. And that's a case that people are talking about a lot. I don't think that decision will apply to the Fed, but I don't know. It's a situation that we're monitoring carefully. Generally speaking, Fed independence is very widely understood and supported in Washington, in Congress, where it really matters. And the point is, we can make our decisions, and we will only make our decisions based on our best thinking, based on our best analysis of the data about what is the way to achieve our dual mandate goals as we can to best serve the American people. That's the only thing we're ever going to do. We're never going to be influenced by any political pressure.
I
People
doubt
can
it.
say whatever they
Still,
want.
what,
That's fine.
hour and
That's not
30
a
minutes
problem.
left on
But
the
we
day?
will do what we do.
If it just goes
strictly
stagnant,
without
that is 3
consideration
days
of
in a
political
row
or any other
Bears
extraneous
not
factors.
stepping in, even though we just broke some levels today. Volume is like gone.
Well, I have time for one more question. I know the question that's on all your minds. What are you going to do on interest rates next? But I'm not sure that
Which I think you
know,
said
and
earlier.
I'm not sure
I
you would tell,
think
even
I
if
heard
you
you
knew. So,
saying that, Lord, the anomaly
I'm not
in
going to
that
ask that question.
being that
The question
even
I
the
want to ask
price
is a
spread
more
today
personal one.
versus what
What is
price
it that you'd
action
like to do
price to
most at
volume
home after
it
an
just
exhausting
does
day
not add
flipping
up,
coins in the office?
especially if it finishes the day down here in volume.
I play one of my guitars. I
Yeah.
do Zoom calls with my kids and my
I mean,
grandkids.
what are we waiting for? What is the market waiting for? I have no idea.
Just to stay in shape.
Could be earnings for next week. Well, most of the blue chips report.
Thank you very much, Chair Powell.
Thank you.
And
When is TSM report again?
Tomorrow.
Tomorrow, right?
On behalf of the Economic Club of Chicago, thank you, Chair Powell and Dr. Rajan, for such a wonderful conversation. You are a national treasure, and I hope all of us can see how important Chair Powell's
But I don't
role
really
in
know how
our
that would
business
affect-
and personal lives.
Maybe
And
you can
thank you for
enlighten me
sharing
on
your
this, but
important
how would,
insights
say
with us.
TSM blows its numbers out of the water? That's a Taiwan company anyway, so why does it matter? Why would that have any effect other than maybe bringing NVIDIA back up? Correlation there? I don't know.
It's guidance.
There you go, I can see that.
Guidance to what's gonna happen with all this whole tariff talk. Well, that was a good exit. Now I just watch. Now, if this harmonic plays out, you can come back to 530.
Ooh wee. Laura, did you listen to the speech?
I did.
They were clowning your boy, making fun of that dude, like they should. Until China and the US play and figure out this shit, I think we're gonna just be dealing with this tariff bullshit. Or until something breaks.
Or that.
Wasn't it an interesting conversation when Neil was talking about how he would have dollars ready for whatever central government needs it?
Yeah.
I found that interesting. We don't know how this system works, bro.
He also said, I forgot, that GDP and not GDP, the labor market and something else, with this whole tariff situation, should cancel each other out.
When it was talking about how immigrants boost the economy.
Yeah.
Yeah.
So he did mention that, like, that this whole tariffs is just going to cause a lot of volatility. Like, he doesn't see it like slowing down or the volatility until this whole tariff shit is over. So until then, there's increased volatility.
Yep. Increased uncertainty.
Really hard to go long or short. You have to lean short though. Uncertainty is not good. Market does not like uncertainty.
Nope. How can you run a business like this? How? How can you project your next quarter? Dude is thinking he's running a car wash.
I don't feel like he said anything we didn't already know. Like he didn't really provide much into like foresight. So like I don't know why. Like I don't know if this dump is justified.
Right? It's not like something new. I don't know why we dumped.
Yeah, like nothing he said was news or like shocking.
Or like saying that he's not gonna cut rates or shit like
yeah,
that. So
he
it's
didn't
like,
give any kind. I agree with you 100% there. But yeah, some people had puts and they banked.
You know, the other guy that was interviewing him, the interviewer, he was also a central government, the head of a central government. I think it was in India. And he asked him, like, yeah, last time you did QE, was it to save equity, your equity market, or was it, well, what was it? And he's forcefully cleared the explanation. He's like, yeah, maybe our narrative was wrong, but you know, it was to It was to save the it was a global crisis, but it was, you know, really to save the equity market.
If we're still tracking this whole thing from, you know, JPM caller and what's happened prior, you know, comparing it to 2020, I think 2022. The month of August or month of September or of April, still bearish. 520 in the day.
That's what I'm thinking. Lord, I got 520 put for tomorrow. Just one now.
Nvidia is dumping. Back to 100.
Darkwave. Break it down. Darkwave. Break it down. Darkwave. Darkwave. Break it down. Darkwave. Break it down. Darkwave.
Holy spy. What puts did I have? 590, 524. Yeah, okay. Definitely not worth it. Shit's dumping. Nvidia dumping? Nope. Microsoft, bro. Blech. Microsoft's been dumping all day. Disgusting. Down 4% on the day. Tesla, yikes. 6-7% down on Tesla. Jesus, SPY. Crazy market. This is so unhealthy. Because the IV is so high, like you could get fucked on both sides. It's crazy. We still got power hours, still got an hour. Q's is down almost 4% on the day. $520 today, I guess. Jesus. Bro, we lose 520, we're gonna go back towards 500s.
Your harmonica is playing out on NQ in a 1 hour.
I know there was a few bearish patterns here. Dragons from the 30-minute. And you lost CD's nuts. Yikes. Why'd you guys make me so much puts? I bought them at 99 cents. And now profit at 103%, and these are now over almost $3. That could have been another 200%. Sheesh.
You could have got 520s for 61 cents after, I think, is it Richie or Mike, Bearish Mike, that was talking this morning. If you'd have bought 520s about an hour after y'all were debacling that, you could have got them for 61 cents. They're currently $4.26. Up almost 200%.
Jesus.
I know. Mike, Bear Mike is punching air right now.
Oh yeah. I mean, I added them this morning at $1.60. They're currently $4.47.
What did he have? Does anybody remember?
No, he was just talking about if it had broke below, it was like 29 or 529.41. It was going back to 520, and we did exactly that almost. And the day's not over. I added it to my watch list, the 520 calls, just to see what they would be at. They're at $304 currently, and that was while y'all were talking about it.
Those 524s just hit 350 a contract.
Yeesh. I know, my headphone died when apparently you took that. It was like right at lunchtime or my lunchtime. Wasn't paying attention to anything.
Could have gotten in on the re-injection there. Fuck. Where did those go to on the pop there? Well, they came down to like 68 cents from 99 cents. Jesus.
I like it when you reiterate cash is king, Lord, because I just don't even play. I look at that stuff and I'm like, you know what? I'll throw it on my watch list and watch it gain or lose money, and not like basically like paper trading. Add it to my watch list when I think I'd like to buy it, and then just watch it either lose or gain money all day. So definitely haven't been
So
playing.
exaggerated. Like there was nothing new about what he said.
What are you talking about? He was clowning him. He was literally clowning. He said,
But nothing they talked about. Nothing they talked about was
he said these are the most highest tariffs in history of the U.S. He
Yes.
can't. He said that.
They are, but that wasn't new either.
And they spoke about will he save the market? He kept asking him, would you save the market? People expecting the Fed put. Where's the Fed put at? And he's like, no, we're not here for that.
Which only means Jay Powell's okay with it continuing to go down.
I honestly
Just need-
expected him saving the market, but he actually went against the president.
He won. I feel like it's gonna get bad one more time, and it's gonna put him. Like I said a couple of weeks ago, he's gonna have to get forced into the position of saving the market, and then once he does that, you'll start seeing a lot of other things start aligning a lot better. Then you might get that Trump tweet, "It's time to buy the market again."
The thing is, he can't save the market if this guy doesn't back off with these tariff talks. You want him to save the market, and he continues with this tariff war? What sense does that make?
Re-say that again. He's gonna try to force the feds to cut to ease the pain of the tariffs on. Wait, am I saying that right? On.
Yeah, you are. Keep going.
I lost it.
You're on the right
But
track.
he's essentially by pushing the tariffs up, he's causing
What you want to say? He's trying to force QE. He wants to force
Americans
QE.
get into a pinch.
He wants to force.
You're going to be a
QE.
little bit more knowledgeable on it, but I understand that what he's doing is forcing the hands of both players, and it's not going to be until he gets Fed Powell into a position of which he needs to cut before any of these tariffs and everything just go away. Otherwise, he's only won one hand, which he's okay with. I'm sure. I don't know. You can't handicap Trump, you know, but I think he's going to end up getting both. And if that requires the market to continuously go down a little bit lower, maybe not a huge amount, but, you know, we're going to see a new low from the previous low that we just hit. I think that's where you're going to see Fed Powell's going to get forced into it. And those tariffs are going to stay in place until otherwise, and or until other countries subside. I don't know how to say it educationally, to be quite fair with you, but
What he's trying to do is he's trying to have the Feds lower rates so that he offsets the tariff.
Yes,
that's what you're trying to say. But yes, I agree.
And then once it offsets it, you're going to see that America as a whole still strives to be the best, right? It's not going to hurt us as bad as it's currently going to hurt every other country. I mean, look how many countries already, you know, got their 90-day suspension on those tariffs because immediately they wanted to work a deal. China is the only one that is going to be the pain in the ass to sit there and try to work a deal with. And once you got them, you got every other country.
Well, yeah, I mean, that's granted. China's the only one that could put up a fight against the U.S.
Exactly.
And the other countries can't.
Exactly.
So it's like, why, like, the U.S. wouldn't even be picking a fight with these other countries if it wasn't China, but they put these other countries in position where they have to take sides.
Yep.
It's exactly what's happening right now. They're negotiating other countries to block China.
Yes, sir. And eventually when that starts to happen, you start getting China to get hurt even, you know, more because their economy already.
But again, like this is China. Like the history of China shows they do not care about losing everything.
Don't let people die. Yeah,
exactly.
Don't let people die over it. They don't give a fuck.
Let their own people die. They'll kill their own people. Let them die. They'll kill their own people. Like, you don't remember what happened in Tiananmen Square with Mao Zedong? Like, so like you have to remember, this is China. This is an all-in type of player, right? Like, so U.S. has to be the same, like the exact same weight, or else they will not pull this off. The thing is, China does not care to lose it all. Like,
and to be quite frank, it's like, you know, even though it does affect us as Americans or as people that live in America through, you know, day-to-day living and shit like that, it does not hurt us as bad because of the policies that we have in place. We're not killing people over here. Yeah, maybe you aren't going to get your Starbucks drink every fucking morning or buying your Cadillac while you live in a fucking box for a home, but it's not killing people, and it's not going to kill people. And now it might people might suicide because they got bills over their head, but that was their choice. That was not America being like, oh, hey, you need to go buy that new caddy, or you know what I mean.
Yeah, I think you need to look at the bond market is showing showing stagflation, and they're not responding to support his budget. Number one. Number two, China is not in a situation to take a hit on their products and services. Why? Because they had a 2008 similar financial crisis with the housing market in 2020, and they're still trying to export their inflation to absorb their situation in their side on their economy. And number three, if China doesn't back off the inflation, you can't. The Fed, look up how many times the Fed initiated, provided QE to the market and to people, and I don't see it historically speaking when inflation is at risk. Look at COVID, for example. We didn't have enough masks for our own society. We had to import it from China. So we are very tied in and locked in. And if China doesn't budge, he's not going to get his QE.
I mean, I definitely see where you're going. I see that and completely agree. I still think China is more in the pickle than what we are. And going back to the medical thing, it's just as a little side turret thing there with the mask thing. Our hospitals, you know how much money a doctor makes and yada yada yada, this, that, and the other, just for you to go see him for 30 minutes and then tell him you have a cold. Okay, those masks are the least of our worries. My dad worked in the medical field for hospitals through the Army, and if we really had a pandemic where everybody, I mean, you saw it during COVID too. There's not enough hospitals or equipment to go around for anything. You're talking about zero gravity beds for people if they broke their back or something like that. If you had an epidemic where everybody did that, where everybody does any kind of one thing, you're never going to meet demand. You're going to have casualties, and that doesn't matter what country you live in. You can't produce enough and then just have it sit around. It's just not economically friendly.
Yeah, that's why it's a tough situation right now. I hope he pulls whatever he's trying to do off.
I'm not selling, but I am yelling.
For America's sake, yeah, you better hope he pulls it off.
And let me let you straight. I read in the article, Warren Buffett, for the first time in the longest time, did not say, "I trust in America" on his last annual report.
You know what they say? Them chess games take a fucking long time, dude.
Yeah, but I hope. Hey, I'm vested here. I hope this shit works out. But it's not looking good.
Hey, Willie, did you actually still have to go to work? I thought you got rear-ended by a car. I almost had that shit happen to me today going to work.
It wasn't hard enough. I looked down. It wasn't hard enough. So a bus hit him, and then he hit me. So the dude in the back, he took the bigger hit. But yeah.
Damn. I was about to say, I'd have been taking that one all the way to the bank. You hit me in my work truck? Hell yeah, let's go.
The thing is, I have my daughter's.
That's an easy 50 bands right there, Willie.
I know. The thing is, I have my son's first baseball game. First.
Oh, yeah.
He's 6 years old. So I was like, damn, if I sit here and wait for a police report,
then you're gonna go to the hospital and everything.
Oh, I would
and
have
the
done
thing,
that for 50 bands.
No, but the thing is, there was no serious damage. What I'm going to sue for? You know, there wasn't serious damage. If it was like some structural damage, it was literally a scratch in my bumper because I have a big van. But I was hoping, I was like,
Yeah,
because I had like 6 lawsuits in my life, and I like them shits, but my body hurts. Like it wasn't hard enough.
I'm never going around you, Willie. You're gonna just take me to court for everything I got and my kitchen sink.
Oh no, I got my Jewish lawyers on strapped up. But yeah,
That's funny.
yeah, I'm crazy.
Did you have what about yesterday's accident?
That was yesterday's accident.
I know what
I
happened.
told you that- Oh no, I got out the car and they came up. He came up to my car. I was like, "You hit me hard?" And he's like, "No, look at it." And then I looked at it. I was like, "Damn, you're right." It was just a tap. But I love those. You hit me from the back, bro. You paid up.
Well, I'm tired of this, Grandpa.
That one bullish FVG, Snaky.
No, nothing. I've been trying to figure out how I'm gonna get entry into here.
You didn't take the entry when it broke the bottom of the London session?
No, I took it. I took puts and I got a small gain out of it, but I paper handed the shit out of this.
Oh my goodness. I took my little 80%. I tell you, once you break, that's how you break a session. A CAS, exactly what I said it happened. CASV broke, you created a form to FVG, and that was it.
What is TD?
Yo, something going on with Zoom. There's
What is it doing?
a worldwide outage. I don't know what's going on.
Wow. It's a hack, bro. Get ready. That hacking season
Puts.
has
Pop at
begun.
65. Let's go.
Holy shit. You was talking to me, Lauren? What is TD?
No, Holmes is asking a question. $50 strikes that expire tomorrow. The whole chain looks weird. Is it due to low open interest and volume? I don't find anything funny. It's just low open interest. That bid and ask spread though is garbage. That could have also been those 421 could have been from like weeks ago, months ago, and they're definitely not in the money. So and remember that tomorrow's their last day, so those things are probably going to expire worthless. Wait, what the fuck? Okay, wrong exchange.
We're gonna have the Eat Fish Friday Discord.
$60 puts. There's just no open interest, Hams. 6250s. There's just no open interest. You had only like 43. Somebody must be setting also like their bid and ask spread. Whoever has those 43 open interest, that widespread is ridiculous. I would not touch this with a 10-foot pole, bro. The lack of open interest, the volume, you had also 18 volume for the 60s, no volume for the 62.5. Yeah, it's just, remember Friday's OPEX. When you see shit like this, run away from it in the option chain, like fast.
Supply and demand.
You're gonna be stuck holding a big bag. So I like to look at things with high open interest. And that's why I play the blue chips a lot, ETFs, and then anything that has volume in the morning. Look where it's finding support. 520.54. I don't even know if I want to trade tomorrow. What do we have tomorrow? What's data? We had retail sales. Tomorrow is PPI. The reason why I said I don't want to trade tomorrow is because Friday's closed, so we should have a no volume day tomorrow, but who knows? Maybe something happens overnight. Futures, building permits, and housing starts. We could have also seen this sell-off as potentially closing out contracts for OPEX. Who knows? I don't know. OPEX is on Friday and Friday's closed.
Hey, boys.
What's up, Sam?
Big Daddy.
What's up?
That 4-hour extension, baby.
I think all three.
You're crazy. Was that correct on my analysis on why on that on why you took it?
No, from morning, 1 hour, close and retest. About let me see. I got on.
So you played it off the 1 hour analysis though.
No, it was 4 hour was bullish, so I don't want to take. But 9 a.m. the retest and close below at 10 o'clock. I was waiting for right entry, so I around 11:05. I got on a 5 minute. I had 50 contracts. So those calls what I have washed out means I made 25 on it. Then I took 70 of them, made 114, and took another 60 after that, and made about 100, 101, 110. So up
Crazy.
225 up today. From
They
minus
can't.
from
They can't
minus
take you down.
85%. Huh?
They can't take you down.
No, minus 85% on the calls, and regain everything back.
Sunny,
Yep.
you gonna look at the monthly for play?
No, the monthly already there, but we already there. But I'm gonna wait for it monthly close, how it's closed, because we already went down more than right now. What you see, if you see the wick, how far we went, right?
Yep,
So it is not that it's gonna go there, but monthly print bearish like this, and we start to go up and daily give you confirmation, then I'm gonna ride to monthly, low. But right now, we took all of low, so that's it. But I gotta, I was waiting for we touched it is on a Friday low. We call low right now on SPX. I got out there, so. Lordy, he's gone.
I'm here.
Oh, I had a fun, man. Ooh, I didn't post the gains, but I had a fun.
Nice, nice.
Let me post it for you if you love it, my work. I think I took 3 of them, like not 3. Well, get out, enter back, get out, enter back. Hold on one second.
Damn, what news came out? I missed this whole thing. I had to. What happened?
I said we was talking about you earlier.
I was about to say, Mikey, I had
Talking
you.
about me?
I said, I got your back, dude. You called this shit.
I said 520.
Yep.
I'm so pissed, man. I should have held my position. Like, I had conviction that it was gonna move down. But I don't know, man. Like, I got shook out. I wish I was a robot and wasn't an emotional creature. And my original position, it went from 260 to 1159 per contract. Over 560%. Like, what was the news though? There had to have been news from that down.
There was no news. He didn't say anything new.
I thought on the radio or something when I was driving down the road, I heard that Trump said that they put a 245% tariff on China.
Yeah, but that was way
yesterday.
earlier. Yeah,
Oh,
that was
yesterday.
yeah, and Powell, like this moved because of Powell's talking in the Chicago Economics Board, but like there was nothing new that he talked about, so I'm pretty shocked about that.
the only thing he said is that he sees increased volatility with the whole tariffs, but everything else was the same shit he said. And when he said that, I think the market reacted to the increased volatility.
That's like silly because if you just look at literally the VIX, that would tell you
Yeah, I
that
know.
there's
So I
increased
don't.
volatility. It went up.
Yeah.
Like,
Yeah, but since Monday, we've been making higher or lower highs and lower lows. Like today, well, technically, if you take the pre-market high and you pull to the intraday low before the big dump, it came down and retraced up to the 618, and then it dumped hard from the 618.
Lordy,
Yeah.
I posted. I was in the calls. It was around 52,
Nice.
53,000. I cut it and got the first 50 puts, then got the profit, then I got another 70. I took the profit and I got 50 or 60 again.
Nice.
So from minus 85 to plus 225 around.
Yeah, I played the call side and then I played the dump here, but I fucking didn't hold in long
No,
enough.
I had this call from, I think when I had it, day for yesterday or the day before that. Because the weekly was
Oh,
bullish
shit.
before I took the call, but it worked out.
You were okay. You were kind of sweating there then after yesterday's
Me?
move. I never
Me?
sweat, Sammy says.
I didn't get it. What said?
I said you were sweating
Who, me? No, I
on the
don't
call.
sweat.
But that's what I said. Sammy doesn't
50
sweat.
is dust. 50 is dust is dust. That's fine.
Jesus.
That's why, I say.
he really just said 50 bands, dust is dust. I'm dead.
No, did you, even Sneaky, when you asked me, I said, I'm not going to cut it until I see something. And if it goes to dust, it's fine.
The day I make 60K in one
Give me
trade
that,
in one
bro.
day
If you
is the
don't-
day I know I made it.
If you don't
I already
care
made it
about
back.
50 going to the dust, let me have some.
But, I just had 114, 102, and 72,000 minus that 52 something. So I'm in plus.
Dude, you ought to give Sammy an admin and let him post his trades like you do. Like have a Sammy.
No,
log.
I don't want that. No.
Come on.
I have enough stress from Sneaky, so I just.
I don't stress you at all. What do you mean?
I know, but I feel it, not you.
I feel it.
that way, bro.
Why do you feel stressed for me?
Like, okay, if you have only 5 or something with me in a calls, right? And Sammy,
Sammy, all you gotta do is just list what you do and then list when you get out, just like Lord. It's up to anyone else who gets in and gets out.
No, listen, it's gonna be interfered with the Lord, and I don't want to do that. I have no issue. I can say I am in a calls or whatever, but then people ask, okay, where is your exit? This and that. It's too much work for me, and I cannot. Otherwise, I would open my own Discord. I don't want to take those responsibilities. No, and the Lord is taking it. God bless him, man. Seriously, it is. It is not worth it for me. Otherwise, I'm gonna distract from my trade.
And it's like I would have to charge you guys $10,000 per subscription for that to be worth it.
For that stress.
No, it's stress. When you call out something, Sneaky, you got with if you get with me in the call, right? I don't care about 50,000, right? I care about your 5,000 because of how much.
Bro, I don't even care about my 5,000. Why do you care about it?
I'm just giving you an example. Somebody's poured in something, right?
Yeah.
Because of 50,000, I started at 10 and I posted when I had a 10, right? But it was minus 85%. I said, let it go. That's fine. If it doesn't see anything, if I see something for upside, I would average down, like last time what I did. Yeah, but it doesn't look like. But hourly give me confirmation for downside. I said, this thing's gonna be go down.
But how did hourly give you confirmation for downside? Because daily bias was like inside bar.
I know, but it was retest. I always say when you go against your bias, right? It was, I was not playing weekly. Weekly was bullish bias, but daily doesn't have bias. But the hourly broke and reached CISD at 10 o'clock. And 11:15 somewhere, I got in if you see 5-minute CISD broke, I got in. I said, let me go in because it looked like it's not going to be going there because the weekly taking time to go there. So that means
Wait, but it never retested on the hour.
hourly did it 10 o'clock. Look at we broke at 9 to 10 candle, then 10 o'clock went all the way and retested. What are you talking about? On ES.
Oh, I see. We broke it on the 8 o'clock and then retested 9 o'clock downside.
Yeah, the 10 o'clock
Gotcha.
close, yeah. And
Gotcha,
then I was
gotcha.
5 minutes and waiting for the entry. It took a long time to give me almost entry later. So
If I'd have held my position, I would have turned $1,600 into 11K.
There are a lot of calls flooding for tomorrow.
no, but listen, no, the reason sneaky, when we came down, right? I had my target. I said, okay, if we are doing this, it's gonna be low Friday low on SPX, and it is equal low right now. It's touched there. I got out 2-3 points before. But each and every hour candle, I take my profit. The reason is, if it goes to the other side, that's why if you see the 3 trades, that's why I took 3. First hourly candle, second hourly, and third hourly. But I cannot do work like Lord does, no. And he's scalping, he takes sometimes long trade, but I'm not taking, scalping. But if it's going to your way faster, you can take their money right on your in extensions.
It doesn't matter if you're scalping or if you're swing trading or whatever. It doesn't matter. You're just making up excuses to not do it. That's all I'm hearing.
No, I'm sorry, but
I'm dead.
I'm not making excuses. You know that, and that Sneaky had one right call and one was wrong, mine, right? So I like to stay away because of I don't want somebody's port ruined because of me, because I'm stupid now entering 60 and 50 on SPX.
You know how many people's lives you would have changed if you would have done that and people took your trades? Just this year.
Ask Lord a really opinion. Seriously.
Bro, you went from 10K to fucking practically $1 million in this year.
Yeah, my goal is 6 million again. I'm already there at 1.3 almost.
We already know Lord's a baller. Like, I don't care what he says. We know he is.
No. Oh my God. Even patient need means, even I don't, as soon as I enter, I don't go back look at small time frame. No 5 minutes, nothing. If I enter 1 hour, I enter when I see 1 hour, I enter on 5 minutes and never go back on 5 minutes. I just watch hourly candle. If I enter on 4 hour, I just watch only 4 hour candle. That's it. I don't watch it in the lower time frame. Only for entry, I go there because of that's not my style. And then you shake out. No, I don't do that.
So you trade ICT, right? You trade the swings between prices of like London and the other.
Yeah. Previous day, if I play daily, right? The previous day high or low, I get out, and your bias. If I play weekly, I try to get out at weekly high, previous week high or low, whichever way bias. I was almost up 25 grand, but I was thinking it's gonna go to weekly because the weekly was bullish, and 4 hour entry I had it. I was in a plus, but I was waiting on to go to previous week high, but didn't happen. I said, that's fine, but now the trend changed, so I said, okay, I'm gonna take my money back from these guys. I took it.
The fucking new spot was gonna dump because yesterday's candle and the day before's candle, it pushed up on really, really low volume.
But daily is completely
on the daily.
If you see today and past 2 days, candle was completely disaster candle. You cannot trust on this candle. They didn't took sweep, low, nothing, clean sidebars and stuff. So until I have confirmation on hourly, retest completely nicely and close below, then I get it. Yes, last night I saw that because of, if you see last night at before we closed, we retest and closed below. I said, overnight I do not want to go because otherwise I would go in overnight because of if you see at the end of the day at 5 o'clock, we retest and close below hourly. But I said, no, I'm going to wait tomorrow. If it start to go up, I don't have to be DCA or I'll cut it if it goes down. And patient means I have high patient, you know, very high patient. Also meditation.
Like
Bring you
I
there.
I shouldn't have an issue with holding anymore. Like with the daily swings from trading 0 DTs from these like swing highs and swing lows. Like I like Sneaky was saying yesterday like how I hold through a lot of pain. But today I couldn't do it, dude. I just couldn't do it. I don't know why. Like I got shook out, but I got shook the fuck out today.
It won't bet.
I did, dude. Like
who?
Me.
Sneaky?
Like no. Well, Sneaky was yesterday. He was talking about how I'll see something. Or it might have been the day before.
Oh.
Might have been on Monday that he said if I see that the chart is bearish, regardless if it's going up and I'm in puts, I'll hold that shit because I know it's coming down and I'm generally right about it. I knew today it was going to come down. I knew it. I was looking at last night. I stayed up till like almost midnight looking at this chart. Like, all right, well, this happened and this happened. This happened. This shit looks bearish to me for these reasons.
And my other things, I keep 4 candles. Like, you know, I keep in mind 4 candles. I always trade, TT Trade does that. So the 4th candle, include today, last 3 candle, I was looking for that Friday low. We touched it. And that candle going to be out of my picture tomorrow. So my target was there. It's touched it, I'm out. So now tomorrow it's going to be this 3 candle today, yesterday and day before yesterday, and then new candle going to print. And then how is take low, high, and come down. Then I go from there. What's going to be a trade?
I think we make a lower low this week, or I think, yeah, like, well, not tomorrow, but like maybe next week we'll make a lower low from on the daily, lower than 482.
There's nothing you can do, Rich, when you get shaken out of a news candle. That news candle shook you out. It would have shooken anybody out. It's fine. It happens.
Yeah, it happens. Yes.
That news candle was a big candle when it popped up there. That was almost a percent move, a half a percent.
Wait,
move.
was that news this morning?
Yeah.
Was that? Oh, that was the Atlanta GDP
Yeah,
stuff, right?
that's a candle to get the fuck out.
Lord, even
Especially off of zero.
If anything, you could have just gotten back into puts, but once you
I
get
did
burned,
scalp 2 more, but then I got 100%, and I was like,
no,
all right, I'm just
Richie. Sometimes
Damn,
if
spy,
front run is if it's a front run, Richie, front run is a problem. Like if you remember the 400 points we move in the news candle, Lord.
Yeah.
I was puts, right? But what happened? I front run SPX. I cannot get out, in the morning because we took the low, and then start to go up. That means I knew that it's gonna be happening, but I didn't choke out. I said now it's dust. It's dust 118,000. But next day, what happened? Hourly give me confirmation. I had 80 total. It was total 90. I came out to 254,000 that day.
Yeah, we loaded up on those ones. We doubled down on that.
Yeah.
That was, not gonna lie, I sweat through that play, but that was a nice play.
Holy, they're buying right here.
I know. That's why I got out.
Did I or did I not call 520 earlier? I said 520. That's 5.
Yeah, that's 50. 50 to 20 was my 50 to 20, 55 was my target Friday low.
I said it at right before 11 o'clock this morning. I was like, SPY's coming down 520. I knew it.
I knew I should have bought a 520 54 here. That's where, fuck. It's okay. That would have been a solid play there. The last 0 DT, the last 5-10 minutes.
Dude, that would have been 30% for Tuesdays already.
Let's see what those zeros were. We're 520 to 525. Bro, these were 17 cents and they're at $1. They went to $1.28. Jesus. Well, if 520 holds, you look for upside. If it fails, you could have made almost 650% from the bottom there to this pop we got. But if you lose 520, yeah, we're going to 500 or lower. I still will stand with my thesis here that we're going to be stuck in this range between 538 and 524 until something breaks or we finally get some news that tariffs or China settles down with the U.S. about tariffs, and if not, then 520 loses this level. That has to be with that's probably gonna have to do with earnings guidance.
508 will be next level after that.
So
I think we might retrace back up to 529, maybe, because that would be 618 retracement.
All right, boys.
And then make a lower low. If you look at the daily looks bearish as fuck, man. It looks really
later, Sammy.
Yeah, because of my employee he cannot work anymore, so I have
Fire.
more them employee. That's why they came in. But no, he worked. He's in a flight school, and then now they have issue in Florida. They cannot work this and that because of Trump policy, and they so he has to quit. Because of this, at 15 days you have to finish your course and go back to your country. That's what they told all pilots.
Oh,
that's not
shit.
good. That's what happened. Yeah. So school had a meeting yesterday, and he came, and he said I cannot work because of everybody have warning now. As soon as they finish the course, nothing here. You have to go back to your country. And the flight school guy here in Stewart, he's friend of Trump, but he said, what I can do. This is what is going on. So I lost the employee. I'm looking for employee. Otherwise, I have to work myself all day like this. Find somebody. So, all right, guys, have a good night.
Later, Sam.
Peace out, Sammy.
So one thing that's interesting here, we had this whole multiple inside bars where it looked like, Monday you were gonna start to get bullish again, but now you're back within the range. Man, the thing I have,
that push up was a red candle after that inside bar, but there's no volume to support the move.
What I think about this current candle that we have compared to this bullish one we had on Friday was 97 million volume, and this is 64 with almost the same spread. If you look at like the length or whatever here, it's basically the same. Wick to wick, wick to wick. Body is just different, right? There was buying pressure here. So it's the same spread, but off of less volume. Do you buy this move? Or what can happen, because it is increasing on the sell side from yesterday to today, tomorrow you get followed through to the downside.
Right.
But if that's the case, you need to have increased volume tomorrow. Otherwise,
zoom out a little bit.
Otherwise, the volume is gonna lie to you again.
You can look at the trend since Monday, or since last Monday.
We have to ignore this right here.
Daily.
We have to ignore this because this was all tariff. So
tariff news and all
if
that
you
shit.
go back to our average, it's a solid volume. I would think it's not bad, not great. It's just like I think it's just you're waiting for shit.
Yeah, well, but since all-time highs since February 20th or 19th.
I'm thinking what can happen is you go probably tomorrow the same way you pushed up here like this. You could come back somewhere right here and then start to go back up into this stupid range again. Basically the
they're gonna fill that fair value gap under that
inside
hammer
bar
candle
range.
You see the long bullish engulfing candle? The candle after that? There's a fair value gap under the wick to the bottom of the bullish engulfing. There's a lot of liquidity down there. I don't think they're just going to let that shit go.
You know what's crazy is that if you actually look at the that volume chart that you sent, that Friday candle, there was more sell volume than buying volume, but we went up. You notice that?
But what is the indicate? How's the indicator measuring that? Like, what is it taking into account? Like, is it telling you like through the L2 book, or how does it telling you? How is it gathering that information?
Whether there's more bearish or bullish volume?
Yeah, like how is it gathering from where and from what?
I would have to read the...
Because that's a big deal. Because is it taking into consideration dark pool prints? What is it taking into where it's telling you or there's more buying or selling? I think also TradingView has their own volume one. volume candles. See, trading views volume candles here on saying it was buying pressure. So that's what it all matters of how what the indicator is reading. You can go to volume footprint. That's the
All
other
it does
one.
is just separates the buying volume from the selling volume, and it shows it in like kind of like a histogram form. And if there's more, you know, bullish volume, it's the candle's more green than red. If it's the opposite, if it's bearish, right? If it's completely bullish volume, then the volume candle is completely bullish, or the volume bar is green. But if it's all bearish, then it's all red.
So TradingView has a volume footprint. I'm putting this on the chart right now where you can click on it here. You could see all the selling pressure that came in. See, again, I don't know idea how they're getting this, but from looking at volume to volume, the red versus the green, there was for that Friday, or what was this, Wednesday? Where's that engulfing? It's this one, right? Why does it say Wednesday? Was it Wednesday that we got that engulfing? Okay, Wednesday. Thought it was Friday. But it says there was 68 million selling pressure volume-wise, and there was 83 buying.
Right. So
So
similarly,
that
that's
same
how
Wednesday candle, you're saying Wednesday, right?
Yeah,
Lord?
Wednesday. The
So that
engulfing
same
candle.
Wednesday candle said this thing says 2.88 selling and 2.75 buying, which doesn't make sense because
Doesn't make sense. So that's what I'm saying. Like, what? How is it measuring that indicator? What is it measuring exactly?
So also real quick, doesn't buying have to match selling? Because if you're selling something, someone's buying.
But look at the volume footprint here, for SPY, right? If you're looking at this to be true, this again, this is how I'm guessing this works, right? There was a lot of buying pressure on 507.50 here, so you could just see the $1 million, you know, over 100K orders where you had nothing here on the red side.
Yeah.
So that could have been the reason why you pushed up the way it is. There's no volume here, no selling pressure here when you push back up, and then you started getting some selling pressure up here in the millions, 5.6. It's actually pretty cool that it tells you that, like this. So you can kind of see like, okay, this is, you know, to when Rich says like, hey, I don't get why it's moving up. Well, there's a it's telling you why, because there's no pressure here, no selling during this time, during this between what 518 and 505. There was like 0 according to this volume indicator. So that's how essentially also you move up when you ask yourself, hey, well, why is it moving up on low volumes? Because there's no selling pressure. The same thing could be said the opposite.
Yeah, but there's clearly bullish volume in that candle. Like, clearly. On that daily candle, there was massive buying there. Throughout the whole candle.
So do you know why we also bought? Why it also came out here to, what was it, 500 basically? All this with no selling
Because
pressure
Trump
here?
came out with a tweet and said, now's a good time to buy.
Well, it was a 90-day pause, but you know why we also knifed through is because there's also no liquidity over here. Like that 500 range, if you go and zoom out to just regular candles, like over here, there's little to no, what was it, 500, right? You just kind of gapped up during this time period here, so there's not a lot of demand there. That's why you also knifed right through it. And we could also, that's a similar setup right now. If you lose 520, I have 502. I know there's other like harmonics like around 508, 50 something, but I have 502. That this is why you're also, you had that bounce right now at 520 because it knows. You clearly saw it here. We fucking pushed down to 480. So have your range there. I have 538, 520. Below 520, you can go bearish. Above
There
that,
is liquidity there now.
now, yeah, now with this candle, yeah.
Yeah.
It could be, but that's again, you can come down to this candle, this wick here again to 509, 508. this is going to be a huge level here. If you're going to break down to below 500, you're going to have to come with the pressure here, because I think buyers are going to step up here again. And this is why I said you might actually push down over here again, and pressure starts to build up again, and then it waits till earnings. See what happens there with guidance.
The indicator doesn't list where it gets its info from. It just says it calculates buy and sell volume on each candle. The sell volume is the same as total volume, so it will not get covered by buy volume.
I don't know. I just like classic volume here because it just tells you what happened previous candle, right? Pressure wise. Simple. But try it out. It works for you. Anyways, guys, 2 plays. Calls and puts. I fucking paper handed those puts. But I did get 100% on the 524 from 99 cents to $2. I don't even know what they fucking went to. And then the calls were those Qs to 55%. The puts obviously played better.
Like, there has to be a way that we can figure out, you know, despite our conviction, like I was certain last night, I'm absolutely certain that today SPY was gonna dump. Like, I couldn't have been more sure. I went to sleep with a smile on my face knowing I was gonna get inputs today, and the shit was gonna rip. Like, it was gonna dump down, and it did. But like, there has to be some kind of way, some way that we can figure out.
If you're gonna,
I think you're trying to look for an absolute, like something that is at 100% clip, and like.
No, it's just something that indicates that you have a high probability.
That does that.
Because like I don't understand ICT enough, and I don't understand harmonics enough.
If you look at Sammy's, I want to say that he's got to be hitting at over 85. He's got to be hitting at probably close to 90, to be 100% honest.
I understand that I'm going to lose. I understand that. It's a law of probabilities. Everybody's going to.
Exactly, but his method is like, you have to hold through a lot of fucking pain, and then if you're wrong, okay, like you just chalk it up, and then you follow the exact same rules the next time, and then you just play even bigger, right? Well, in his scenario, right? But yeah, like I don't think there's 100% clip.
I know
there's not gonna be 100%.
I think one thing you could have done, if you especially like if you were looking yesterday night, like you said, for this shit to play out, like damn it, I just
if you pull a fib from pre-market highs
did you buy yourself enough time though? That's the thing. What macro were you, or what charts were you looking at last night to make you say that it was going to go to 520? Were you looking at macro?
Hourly and a
then
daily,
you should have bought more time. I know you could say, oh well, that we've been dropping 3, 2, 4% like here and there, like but like with those whole thing, like any type of news, like today was news, right? GDP, the Atlanta Fed GDP came out and we popped up, and then we popped off of like whatever that shit was earlier today. So it's all news like right now. So in that aspect, you might want to buy yourself some time, especially if you're looking at macro. I think you should have gone like a day out or two.
Rich, you know how much I play, like how much I gamble, and I used to play zeros all day. I haven't touched a zero in like a week and a half, 2 weeks.
A 30-minute harmonic 2 on SPY kind of told you if you lost CD's nuts, you were going to go to PT1 too. I didn't see that 30-minute harmonic until much later.
Yeah, I didn't either.
I called it out this morning.
I played the rejection after when we dumped here. When I said if we lose 527 here, or was it 530 here, we're going to come down here back again to test the intraday lows. Or the pre-market lows.
Richie, look on the 1 hour chart on SPY. I want to show you some ICT stuff that I actually, honestly, I missed. But I saw it afterwards by 11 o'clock. Look at the 11 in the morning candle and the 4 in the morning candle. Where did it reject from? Both of those candles on the 1 hour chart.
The gap.
That bearish.
That bearish
FEG.
FEG.
Yeah.
Yep. Rejected twice. What did that say? They grabbed bearish orders from there and just we call it rebalance. They rebalanced their orders, and the shit just dumped after that from 11
Wow.
o'clock.
If it were not to, there was one right above that though. Why didn't they
At
grab the
11
liquidity
o'clock?
from that one too?
What do you mean?
There's two fair value gaps. It only
But
went
look at
through.
the long wicks. Look how fast the move was to grab those orders. The 11 o'clock candle and the 4 o'clock candle. That's when they show their hands. When they make those fast moves like that, and they close bearish. And then you had those are two failure swing highs that close like that look like a shooting star.
Still made a lower high though, from Monday. So this whole week,
Yeah.
it's done nothing but make lower highs and lower lows. This whole week.
What time frame?
Yeah, 100%. But I'm just talking about today.
Yeah, I
What time
understand
frame
that.
are you talking about?
The hourly.
The hourly.
But look, if you look at
The two
you
rejection.
said
and
that
two
11
close highs,
that 11
failure
a.m.
highs.
candle today, right? It came up
Yeah.
and it grabbed liquidity out of that fair value gap. The top of that fair value gap was at 535.04, right? But then there's another one directly above that. The bottom of it is 535.23. The top of it is 537.04. How come it didn't
Actually,
grab the liquidity?
yeah,
there?
it's stacked. You had two FEs stacking on each other, making failure swing highs. And if you take a fib, it gives you a fib ratio there on those rejections. But yeah. Lordy, you gotta go?
In a little bit.
Okay.
Just kind of looking at here.
What else?
If any indication here.
It's my issue is when I do TA, I'm pretty certain, especially like bearish moves, I have a strong inclination of a bearish move. Like you guys know that I'm bear Mike, damn it, right? Like when I see a chart, I look at it. If it looks bearish to me, and it makes sense, I call it out. And generally, I'm right. I'm not right all the time, but generally, when the market is moving down, I call it out, and it happens a lot of the time. And I knew last night that it was gonna, like today was gonna be a down move. I knew it because the chart was telling me that it was gonna do that, and I couldn't keep my conviction in the trade. Like I knew it was gonna fucking dump. I knew it was. I even called out 520. I called it this morning. I called it. I knew it. I knew it was gonna happen, and I still got shook out. Damn it! I still got shook out.
Well, that shakeout was from news. So I was in calls yesterday with Sammy, and obviously those calls pretty much went to shit. And then this morning, NQ swept London, and once it swept London and created a FEG to upside and inverted one, I took calls, and then obviously that pop helped my calls a lot. But that's where I exited, and then I took puts. But I pretty much paper handed because I was scared of the Powell news. I personally thought he was gonna pump this market up, and it took a fat shit from there.
I don't think so. He's been contradictory or not. I don't want to say contradictory, but he hasn't been helping Trump.
Yeah, he's been battling Trump for sure.
Right,
I agree with that completely. But I mean, just from the amount of times that he's come out and talked, and this shot up, like I had 5-6 grand on the play. I didn't feel like risking that.
That's
so
kind of another reason why I didn't like hold my position, even though I was convicted with the move down. Like I had conviction with this move. I didn't hold because I knew Powell was going to talk on 130. And I was like, man, he could just like
Exactly.
say some shit, and this motherfucker go rip 30
Exactly.
points.
But honestly, I think your problem would have been solved if you took like a longer dated contract.
All right, I get it, guys. You're beating it in my head. I'm gonna start Nah, I'm gonna stop playing zero DTs. I'm gonna go
It's not.
Well, no.
It's not that
I'm
rich.
saying this, and I'm trying to say
It's
this
high
in like a,
IV.
not like
It's
a
high
bashing
IV.
way, but like I'm saying it's because like you could have ate through because like I was watching the puts during that GDP call, and those puts through that entire move from when I entered calls, the puts only dropped 25%. You would have sat through that if it dropped 25%.
It would have been more
Probably would have,
expensive.
What?
It probably would have been more expensive though.
Yeah, they were for Mondays. I was looking at Monday contracts, and the Monday contracts they were at 6.3, I think, for NQ, not SPY, but for NQ it was at like 6.3, and they dropped down to like 5.
Yeah, I would have held that.
Yeah, you would have held that. That's exactly
There's
what I mean. And now those contracts are like fucking 20.
There's a group session video where I cover like your entry and what, like if you're looking at, just to put in the cliff notes here, if you're looking at macro chart for your, like you're looking at, okay, macro, what's going on, and you think it's, it's going to play out, then you're going to have to buy, that also has to coincide with the position you're about to buy in for. So if you're looking at the macro 1 hour, 4, whatever, you better buy yourself some time, because if it's happening on the 1 hour or the 2 hour, it could take an hour, 2 hours, maybe even more. So you have to buy yourself some time. That's just rule of thumb. If you're looking at a play within the micro, then it's gonna happen within probably that day of, especially if you're playing zero and on a ticker that has a lot of liquidity. It's probably gonna happen within. It could be an hour, it could be 10 minutes, it could be whatever. But macro, you're gonna have to buy yourself some time, and time is what you don't have of a zero DT, especially if you're going and looking at macro charts.
Yeah, I know, I get that, but like I said, in the past, I used to buy like weeklies, and I got smoked a lot.
But you're a better trader today. What you knew then, you know much more now.
That's true. I'm still a fucking idiot, but I still am making mistakes.
Management and trading are two different things. Like I'm learning that the hard way myself, bro.
I think we're good.
I decided to play 1DTE like this week because I got slapped last week for playing with high IV shit, right? So I said to myself, you know what? I'm respecting that IV. I got slapped last week, so let me just play 1DTE.
I got slapped like 2-3 weeks ago playing those zeros, and I was like, fuck that. I'm not gonna do that. And then actually, if you look on the options, if you use like options calculators and stuff like that, you'll see that the IV like for 2 days out is still high enough for you to get paid like you normally would on a regular, high IV or regular day on SPY or Qs. Because like the Monday contracts, they were still like 40% on Qs.
That's just right now. They're in a volatile market, though.
But that's what I'm saying is that you can play. So like you normally play zeros on, let's say, Qs, right? And Qs typically sit at about 30%. You can play for Monday sitting at that roughly 30-40%, right? And it doesn't affect your contracts,
With
at
data.
time.
You have data advantage. Data advantage.
Yeah, because like you're normally used to playing, let's say, SPY, 15 or 20%, but right now SPY's sitting at like what, 40% probably, right? So you're not used to playing that volatility, and I think that's why you got stopped there.
I actually do play zero DTEs because there is a higher implied volatility, and I use that to my advantage when I trade, because when there is a price swing, the percentages go crazy, right? Like,
yeah, 100%, but it also goes crazy the other way.
Right? Yeah, that's true. Yeah. I mean, I understand the risks involved, and I get slapped a lot for that, but
Bro, I think there might be a chance we're gonna double bottom. I don't know how long it's gonna take, but I think we might be double bottoming soon.
Yeah, Wayneston posted up a harmonic that has bullish vibes.
I think he said that there was a bat on the 15.
Yeah. Oh, that's what it was. Yeah.
On NQ, I think it was.
Yeah, I think.
But
yeah.
I don't know if that's true or not. I don't have the indicator.
SPX is volume today. If you ignore last week's volume with all the news, it's pretty high.
Right.
Kind of matching Mondays. So again, it's all gonna come down to what happens tomorrow to see if there's follow through. But I don't know that we're gonna get that volume because we have the last day tomorrow, and usually before Good Friday, it's kind of dry. But maybe not. Who knows? I don't know.
That's in a typical market though. Now we have a lot of volatility going on.
Well, that's true too.
Look at the price swings just this last week. It's been absolutely insane. Like, I've never seen price swings like this in my lifetime in the stock market. Unless we're like fucking dumping because of financial crises. Shit.
Oh yeah, this is I mean, this is getting pretty close to COVID levels. But yeah, we're not. I mean, we definitely didn't see 8% days in COVID, like 8% shoot ups in COVID. But yeah.
The Indian dude, the central central government dude that was questioning Powell, he mentioned that the VIX is at COVID levels.
Yeah, and I don't know how banks are pushing up because literally people are defaulting on loans, student loans and credit card loans, higher than 2008 right now. But banks are still making money?
Bro, it delays. You know this shit corrupt. You never seen Big Short? Wait like a year or two. Buy puts for 2 years out.
I think we've already been waiting a year or two.
Oh, like I said this morning, I lost what, like 80 grand in puts last year, from October 23 to June 2024. I think I just timed it 1 year too early. I bought those like 6 months out, or 8 months out actually. I bought it in October for June. So yeah, it's I feel you there.
All right, guys. Well.